Welcome to the European Market Open, everyone. A minute to go until the start of cash equity trading. I'm Francine Lacqua here in London, and these are your top stories. Friday's mega jobs report sparks worries of ongoing Fed rate hikes. The U.S. saw a gain of more than 500,000, boosting the dollar and Treasury yields. The U.S. looks to retrieve what it believes to be a spy equipment from a downed Chinese balloon. Beijing says it reserves the right to respond as tensions flare. Plus, Alliance revamped. We speak to the chief executives of Renault and Nissan about their partnership changes. Don't miss our exclusive interviews this morning. Now let's take a look at the futures. The market open about 15 seconds away. The focus firmly on what the repricing of Fed rate hikes can do because of that much better than expected, unexpectedly strong U.S. jobs report. Now this, of course, is raising the prospect of more rate hikes from the Fed, and then we need to try and figure out the fallout from this U.S.-China geopolitical tensions, how much that's weighing on market sentiment, given on Thursday we thought that Antony Blinken will also travel to China to meet with his counterpart. The other thing we're watching out for, of course, is yen. A huge speculation about who could take over from Governor Kuroda. The Japanese government did refute that report. Investors assuming a greater likelihood of current ultra-easy monetary policy enduring if one of the key architects, as is rumored, succeeds Kuroda. European equities actually on the downside at the open, some 0.7% lower, between 0.4% and 0.7% lower. And then we look at commodities. So Brent crude actually gaining a touch, 0.7% higher. And you can see natural gas, also one of the big stories, of course, that we had this week was yesterday, the ban on diesel coming in from Russia. Cross assets, we not only look at treasuries, but also we look at everything in between in terms of U.S. dollars. So the U.S. 10-year yield, 3.5449. And then you can see dollar 1.2360. Now turning to jobs data, Friday's payroll print shocked markets. Analysts split on just how reliable the data is. Now for more, our markets reporter Valerie Teitel joins us. Valerie, there was also a great story by John Authors always look at some of the older economies, but what does this data volatility tell us?
Look, Francine, I think it might point to the fact that the Fed is unlikely to react harshly to just one data print. The data volatility, especially when it comes to the revisions, has been notable. I've got a chart here of the average hourly earnings revisions. This in yellow is the initial release, and the white is the revisions that came out later. I've highlighted the November print here. The high wage print here was what led the Fed to be hawkish in December, to revise those dots higher, to revise their inflation forecasts up. But 3 weeks later, in early January, that wage inflation number was revised downwards. Now we had an opposite picture for the December data. It came in low, maybe opting the Fed to sound a bit more dovish in January. But on Friday's data, it was also revised higher. So what does this tell us? I think it tells us that the Fed is unlikely to react harshly to one data print, which then bodes the question, what is it going to be to have the Fed revise these dots higher in their next March meeting? Maybe the Fed set such a hawkish bar for themselves higher that they can kind of keep the same tone until then. In fact, we heard from Mary Daly on Friday. She repeated the same line, that those December dots are still valid. But we hear from Powell tomorrow. We also hear from New York Fed President John Williams, another influential member at the Fed, on Wednesday.
Yeah, a lot of people saying, look, this changes everything, and so markets really have to change with it. Valerie, thanks so much. Valerie Teitel, our markets reporter. Now let's dive deeper into the markets. We're joined by Roger Lee, head of UK equity strategist at Investec, and our very own Christina Kino. So thank you both for joining us. What's your take on how markets need to change on the back of that very strong, unexpected U.S. jobs report?
Thank you, and thank you for having me. Yes, it certainly was very unexpected, but the key is really not necessarily where the terminal rate is. Most market analysts are expecting about another 2 rate rises between now and peak rates, so getting to about 5.25. The key to market is where rates are going to go in the second half of this year, particularly those January 2024 rate expectations, because as you know, the market has been absolutely certain that there's going to be rate cuts in the second half of this year.
But does the U.S. data actually push back against us?
One would suggest that if there isn't a recession, if there isn't a downturn in the U.S., then those rate cuts won't be coming through. And that's the key to markets. If you don't get those rate cuts coming through in the second half of this year, then some of the equity valuations that we've got at the moment may have to be revisited.
Yeah, although, Christina, I mean, the counterfactual, I know is a beautiful thing, and we're not there yet, but you could see very aggressive rate hikes because the economy for the moment can withhold it, and then a reversal pretty quickly afterwards. Or is that wishful thinking?
Well, Francine, I mean, that was kind of the wishful thinking that was pierced by these jobs numbers on Friday. And it really just tells you where the market stands at the moment. I think the psychology in markets is still very much looking for any slightest hint of good news when it comes to the trajectory of the Fed rate. And I think, you know, really those expectations for rate cuts later this year have become solidified, which is good news for markets in a way. But then now we're in the situation where good economic news is actually turning out to be bad news for markets, because that really just means that the Fed's message of higher rates for longer becomes a lot more entrenched than markets were expecting.
But you could see, I guess, a scenario where actually you really fight inflation with everything you have, and then you're still left with an economy that's okay.
Yeah, absolutely, Francine. I mean, I think the soft landing narrative is very much kind of has been revived by Friday's numbers, right? The idea that the inflation figure, it has been coming down. The Fed has succeeded in bringing that lower, maybe not to target necessarily, but they have cut it in about half since the peak in last summer. And so the question is, does the Fed need to do more to kind of break now other parts of the economy, particularly the labor market, which, as we can see, is still quite robust depending on the measures that you look at, to finally get that inflation figure back to target? Because that's, I think, going to be the hard part for the Fed, is bringing it down from the current level of 6 and a bit to that 2% target.
So, Roger, how do you play the markets given all of this? We had earnings, we have a repricing with Fed expectations, and then, of course, there's the China-U.S. story.
Well, I think I would certainly agree. I mean, the risk to markets, actually, which may sound a bit perverse, but the risk to markets is a soft landing. The risk to markets is a higher for longer interest rate environment. Now, if we do have rates higher for longer, it suggests that the economy is reasonably robust. It suggests that we're heading towards this soft landing. So in those circumstances, one wants to play stocks, sectors that are cyclically exposed. So, you know, we like the financials and the oil stocks, for
Roger,
instance.
just to be clear, I mean, the markets prefer a soft landing to a long, protracted recession, right?
Well, sort of yes and no. I mean, this is one of the great paradoxes in markets. To get that interest rate cuts coming through to the second half of the year, you really do need a slowing economy. And if the economy doesn't slow, therefore rates stay higher for longer. And that's going to put pressure on, certainly in the US, that's going to put pressure on some of the more highly valued parts of the market. And so what you see in the US is potentially another sort of rotation, as you saw in the last quarter, out of that tech into more value stocks.
Have we reached, what do you do with the UK market specifically? So I don't know whether we've reached peak inflation in the UK. We spoke to the Bank of England governor last Thursday. It seems to be tricky. All the concerns in other markets kind of come to the fore in the UK.
Well, it's one of those interesting contrasts across global equity markets. Because of the construct of the UK market, particularly the construct of the FTSE, that actually this soft landing narrative, this recession receding narrative, is actually good news for the FTSE because of its exposure to financials and oils and materials, etc. So what you could see is a very similar set of circumstances the first quarter last year, when the FTSE outperforms and the S&P perhaps underperformed. So a softer landing a recession receding is definitely good news for the UK market.
What do you do for the UK? I mean, you know, write about the UK every day. What do people here, like retail traders and investors, even longer term, look at and think about the UK?
Well, Francine, I think it's still a very challenging environment for UK assets. Even the record close that we saw for the FTSE 100 immediately brought about some doubts over whether it's going to last or whether this is the best that the FTSE 100 can do. And similar for the pound, you know, we have seen a bit of a recovery in January from those low levels that we saw last year when it hit a record low around September time. But I think there's still very much a lot of doubt that the UK markets in general is going to be able to sustain the little bit of momentum that we saw. But I think Roger's absolutely right. You know, I think if we see that recession or less of a recessionary environment and more of a softer landing really take hold in the UK, that's going to do a lot to improve sentiment in these assets just because it's such a low bar at the moment.
Yeah, thank you both for joining us. Bloomberg's Christina Keenor and Roger Lee, head of UK equity strategy at Investec, stays with us. Now, also, let's get straight to the Bloomberg First Word News with Laura Wright. Hi, Laura.
Hi, Francine. Hundreds of people have been killed in an earthquake that ripped across the border between Turkey and Syria. The quake measured 7.7, one of the most powerful to hit the Middle East in years. It was centered near the Turkish city of Gaziantep. Hundreds of people are said to be trapped. The yen fell on a report BOJ Deputy Governor Masayoshi Amamiya has been approached to become the central bank's next chief. The Nikkei says the government and ruling coalition held discussions with Amamiya on succeeding Governor Haruhiko Kuroda, whose term ends in April, but the government has refuted the report. The G7 and EU's $100 a barrel price cap on Russian diesel meant to limit Moscow's revenues has taken effect. A G7 statement says the cap applies to petroleum products trading at a premium to crude. The Western groups also back a limit of $45 for those that sell at a discount, such as fuel oil and some types of naphtha. They will also delay reviewing a $60 cap on Russian crude until March. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Laura Wright. This is Bloomberg Francine.
Laura, thank you so much. Laura Wright here in London. Now, coming up, U.S.-China tensions balloon as Washington shoots down the alleged Chinese spy blimp off the South Carolina coast. We have the latest next. This is Bloomberg.
We have only 8% of the ocean protected today, and our Earthshot is, as Patty said, 30 by 30. 30% of the ocean, at least 30% of the ocean protected by 2030. And we know that if we protect the right 30%, not only we will prevent the extinction of many marine species, but also we will produce more fish. There's going to be, these protected areas are going to produce a spillover that will exceed the foregone catch. So we're going to have more fish to eat, food security, livelihoods for people. And we know that for every dollar that we invest in a protected area, in a marine reserve, that produces $10 in economic output and creates more jobs. So it's a triple win for marine life, for food security, and for climate, and of course, for the economy. So that's the goal, the mission.
Joe Biden delivers the State of the Union address. Join David Weston and Bloomberg's top political reporters and analysts live from the Bloomberg headquarters in Washington, D.C. as President Biden lays out his plans to tackle the war in Ukraine, Congress's debt limit standoff, immigration, and more. And stay tuned after the speech as we break down the Republican response. Special coverage starts at 8:30 p.m. Eastern, simulcast on television and radio, only on Bloomberg, your global business authority.
Welcome back to the Open, everyone. 13 minutes into the European trading day. We're seeing quite a lot of pressure across the board. Now, a lot of these stocks are retreating. Unexpectedly strong U.S. jobs number on Friday really is raising the prospect of more rate hikes from the Federal Reserve, and so a lot of markets are taking stock and readjusting. Now, Washington has launched a mission to salvage what U.S. officials say is a surveillance balloon from China after shooting it down off the South Carolina coast over the weekend. Beijing has warned the U.S. to not escalate the situation, but the U.S. says its actions were appropriate.
Any country that has its airspace violated in this way, I think, would respond similarly, and I can only imagine what the reaction would be in China if they were on the other end.
Now, for more, we're joined by our Bloomberg senior Asia editor, Bill Ferries. Bill, thank you for joining us. Hey, this is not the first time that we have skirmishes. There was a fighter jet near miss in 2022, U.S. warships, of course, in 2021. How does this compare to other standoffs between the U.S. and China?
Well, it's certainly gotten, in some ways, more attention than what security experts would say are more serious national security threats from Chinese surveillance. But it has, it came at a very critical time just before Secretary Blinken was due to travel to China. It comes with President Biden due to give his State of the Union address to the Congress on Tuesday. So quite a sensitive time, and it's particularly for the U.S. administration. And it's going to continue as these divers go out to pull up and salvage this balloon and the pieces and report back on what they find.
So what does it mean, Bill, for possible retaliation? At the moment, is it rhetoric, or could we see really a worsening situation between the two countries?
Well, I think the first thing that we'll be looking for is whether Secretary Anthony Blinken reschedules his trip to Beijing and what kind of message he plans to carry with him. There's a lot of talk that he's going to have to show up with a slightly tougher message. There's also talk on the Chinese side of that they want to find a way to retaliate. We have no idea what form that could come, but the U.S. Navy continues to operate throughout much of the waters in this region, including contested areas. Will the Chinese push back more on that? That's a possibility. There's also talk in the U.S. that they could put additional technology sanctions on Beijing, depending on what they find when this balloon, the pieces of the balloon and what it was carrying are brought to the surface.
Bill, thanks so much. Bill Ferries there joining us, of course, on the very latest between the U.S. and China. Now we're back with Roger Lee, head of UK equity strategy at Investec. Roger, thank you so much for sticking around. When you look at, of course, the U.S.-China tensions, how do they, translate into your world? Are there stocks in the UK market that are more or less attractive because of this?
Yes, well, I mean, there's clearly quite a lot of exposure to China and Asia within the FTSE. Some of the well-known stocks, certainly some of the largest stocks in the FTSE, and obviously our exposure to mining as well. I have to say, in this particular context, though, question: does this increase tensions, or is it just a fact that we have to live with this sort of tension between the US and China, and the West and China? And I think what that actually leads from a bigger picture, from a longer-term perspective for markets, is this idea that globalization, I think, is in retreat. I think the idea that we have this ongoing tension between China and the US perhaps suggests yet again that globalization has reached a peak, and that has profound implications over the longer term in terms of inflation and costs, etc.
Roger, we're just also getting some breaking news out of Adani. So this is Adani Transmission. Now, just a reminder, they have about 10 companies. They have Adani Power, Adani Green Energy, Adani Total Gas. This is Adani Transition, and they will repay $1.1 billion of a share-backed facility. We're also hearing, and we have heard over the last couple of weeks, a lot of the banks saying, look, we're not going to use some of, the Adani stock as collateral. Does this have global implications, for example, into UK markets?
I mean, it always has implications when we have this sort of financial distress with such a major corporation. I think the market has been dealing with this now, or the tension around this for a while.
Yeah. Third week, I think.
Yes, third week. Whether this necessarily is unexpected to the market, I think is probably more limited. But there clearly will be some exposure to the banks. There always is in these sort of situations. Now, whether this is whether it's going to be particularly concentrated or not, I'm not sure. It's terribly clear at the moment. But the market has to live with corporate distress all the time.
So are you worried or are you surprised that we haven't seen more corporate distress? Not necessarily because of Adani, but the leverage it's incredible that we've gone from like 0.5% to 4% interest rates by the Bank of England, and we haven't really seen any huge bankruptcies or zombie companies.
I mean, I think that's a really fascinating question. I mean, where is it? Where is all the debt?
Right.
I think the answer is, from a public market perspective, actually companies went into this particular cycle with relatively low levels of debt. If one remembers going back into the early 90s and the sort of huge amount of corporate property debt and loans that were out there. We are in a very different place now, I think chastened by the financial crisis. So I think from the public market perspective, perhaps it is a pleasant surprise that the market is less indebted. I think from the private sector, I think that's perhaps where this is more going to land. And again,
when does it land? Roger, is there a worry that it's this
when it needs to be sort of refinanced is when it lands. I mean, I guess for the time being, there is still a limited amount of runoff in terms of the financing that was put in place in the very low interest rate environment. You would expect that to start to be run off over the course of this year. Yes, so I think this is probably more concentrated in the private sector in this cycle rather than in the public markets.
Roger, thanks so much. Roger Lee, their head of UK equity strategy at Investec. Now, coming up, we also get the latest on the powerful earthquake that has killed hundreds on the Turkey-Syria border. We'll have, of course, full details with our person on the ground. This is Bloomberg.
Are the exception in finance, not the rule. Morningstar has taken an in-depth look at women in the industry, and the numbers are startling. The firm found that in 2020, women made up 14% of global fund managers. That's largely unchanged from the year 2000. Morningstar also calculated that while the number of women at the top of the corporate ladder has increased, it won't be until 2060 that women will reach parity with men in the C-suite. Studies have shown that increasing the number of women managers leads to better decision-making and moderates overconfidence. European Central Bank President Christine Lagarde insists that male domination of the banking industry made the 2008 collapse of Lehman Brothers more likely. As Lagarde put it, if it had been Lehman Sisters rather than Lehman Brothers, the world might well look a lot different today.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
From the world of politics to the world of business, Balance of Power with David Weston brings you news, analysis, and insight from and about politics power players. Balance of Power, weekdays on Bloomberg.
Welcome back to the Open, everyone. We're 22 minutes into the European trading day. The picture is one of losses across the board. Again, we had an unexpectedly strong U.S. jobs report, raising the prospect of more rate hikes from the Federal Reserve, and then there's a lot of concern on the U.S.-China geopolitical tensions also weighing in on sentiment. European stocks down 0.6%. Now, hundreds of people have been killed in an earthquake that hit along the border between Turkey and Syria. The quake damaged highways, an airport, and the local natural gas network. While rescue efforts are ongoing. For more on this, Bloomberg's Simon Demokan joins us from the Istanbul bureau. Simon, what's the latest on the quake rescue?
Yes, that's right. The quake hit 7.7 magnitude at 4 a.m. in the morning local time, and now we're about 6 hours into the rescue efforts. Of course, this earthquake was so huge that it was felt in countries such as Egypt, Lebanon, and Israel. We're hearing that reportedly there are almost 300 people dead here in Turkey and more than 200 people dead in Syria, with thousands injured. Turkish authorities are saying that more than 1,700 buildings have collapsed across several cities across Turkey. And we've also just heard that Turkey has halted crude flows to a key export flow place in the Mediterranean as a precautionary measure. No leaks have been detected, though.
So who's offered, Simon, international help so far?
Yes, we've heard from the U.S. Saying that they can assist with these rescue efforts, as well as Israel, India, and Azerbaijan. Of course, straight after the earthquake hit, Turkey's Interior Minister Süleyman Soylu spoke in Ankara and said that Turkey is at a 4-level alert, which includes international aid. And of course, it's a race against time. It's wintry conditions in the region there. Currently, it's rain with around 2 degrees Celsius, but snow is expected. And of course, there's thousands that need to be rescued.
How prone, Simon, is the area to dealing with earthquakes?
Turkey is extremely prone to earthquakes. It's on one of the most active seismic earthquake zones, and this could be one of the biggest earthquakes we've seen in decades. Back in 2011, a 7.1 magnitude earthquake hit the eastern city of Van, with 600 deaths and thousands injured. And there was the huge earthquake in 1999 in northwestern Turkey, which killed 18,000 people. So unfortunately, Francine, Turkey has a lot of experience dealing with these tragic events.
Thank you so much, Simon, for joining us today. Simon Demokan there in Turkey. Now, coming up, the Adani stock rout enters its 3rd week with the group stocks and dollar bonds falling today. So we'll have plenty more on that story shortly. Just moments ago, we also heard that one of the companies of Adani Transmission, will repay around $1.1 billion of their share-back facility. Futures in the U.S. also down, as are European stocks after that unexpectedly strong U.S. jobs report, raising the prospect of more rate hikes from the Fed. There's also concern over U.S.-China geopolitical tensions. This is Bloomberg. is the chance of humankind to really understand itself. How much of that is true? How confident? Did you actually overachieve? Did you, back then realize that we would be using AI in many different jobs? Was it slower or faster than you thought at the time?
I think if I had a 35 or 40 year prediction task, I would have been more or less on track as to where we are today. But I would have predicted steady linear increase over time. But instead, the field had very minimal improvements until the last 5 or 10 years. Then it really took off. I think we ended up in the right place, but I was very wrong about the trajectory. To this date, we still know very little about how the brain works, but these machines are getting ever more powerful. And I feel in some sense, we did end up learning what human intelligence is by learning what it is not. If we exclude all the things machines can do better than us as what makes us unique in our human intelligence, then now we can rule out many, many things, because AI or machine learning has become so good at so many things that what's left must be the key aspects of human intelligence.
Welcome back to the Open, everyone. 30 minutes into the European trading day, and here are your top stories. Friday's mega jobs report sparks worries of ongoing Fed rate hikes, while the U.S. saw a gain of more than 500,000, boosting the dollar and boosting Treasury yields. The U.S. looks to retrieve what it believes to be spy equipment from a downed Chinese balloon, while Beijing says it reserves the right to respond as tensions flare. And of course, a powerful earthquake in southern Turkey kills hundreds in the region, with many more injured and trapped. The quake was felt as far away as Lebanon, Israel, and Egypt. We'll have full roundup of news with our reporters on the ground, and of course, every moment we think about families that have lost loved ones in the earthquake. The picture overall in the markets is not only on geopolitics with the U.S. and China, but also what happened on Friday after that blowout report from the U.S. The U.S. jobs report now raising prospects of more rate hikes from the Federal Reserve. Then there's concern over the U.S.-China sentiment because of the downing of that balloon. We're expecting to find out more in the coming days. And then, in terms of some of the currencies, there's something with yen. If it's true that rumors point to that it's one of the architects of this ultra-loose monetary policy will succeed Governor Kuroda, that will have huge implication for currencies, which is why we're seeing a bit of pressure on currency, and then the Swedish krona falling to the lowest against the euro since 2009, something also we need to keep an eye on. Sectors on the move, but there are some interesting stories when you have, for example, banking stock. There's a new chief executive at the banks. Technology, real estate, and retail really under pressure, down some 1.5%. Telecom, the only one that's slightly in the green, but really it's a little bit flat. Telecom, 0.07% higher. So as we were saying, the yen fell after the Nikkei reported the BOJ Deputy Governor Masayoshi Amamiya has been approached to become the central bank's next chief. Now, the government has actually refuted the report. Joining us now to discuss all of this is Bloomberg's Geroid Rady in Tokyo. Geroid, thank you for joining us. So what could this actually mean for the BOJ's current ultra-easy policy?
Well, I think if the report does turn out to be true, and as you say, the government has denied that any decision has been made yet, but certainly Amamiya has been the leading contender in many analysts' eyes for some time. If it does turn out to be true, I think it maybe what it means is more in terms of what it doesn't mean. I think it means that a major change in BOJ policy in the next couple of months becomes quite unlikely. Obviously, there's been a lot of speculation over the past months that the BOJ is due for a major shift in speculation, most of that coming from foreign investors. But obviously, Amamiya, being the deputy to Governor Kuroda, would be something of a continuity candidate, would be expected to continue to keep policy certainly somewhat loose, rather than the outright pivot or shift that some people seem to be expecting.
So, Gera, do we have any sense of who else could actually be in the running to lead the BOJ?
Most of the speculation has centered on Amamiya, as well as the former deputy governor Hiroshi Nakaso. He would be a more hawkish choice than Amamiya certainly would be. There are a lot of other names in the mix. The other one that was reported a couple of weeks ago, surfaced in one report that he was being considered, was Hirohide Yamaguchi. He was the deputy governor to Kuroda's predecessor, more than 10 years ago, or 10 years ago at this stage, Shirakawa. He would represent definitely, or certainly would suggest that the government, that Prime Minister Kishida is looking for a larger change in policy rather than sort of a continuation of the decade of Kuroda economics that we've had.
And so what are you hearing from analysts? I know a number of banks, of course, have put interesting notes out there.
Yeah, there's certainly the reports today. I think people are a little bit reluctant to commit too much of it, given that the wording was that Amamiya was being sounded out. The wording is a little bit weak at this point, given that we are expecting the nomination to happen in the next couple of weeks. But certainly are saying that people are saying that this choice would reduce the likelihood of a major shift in the next couple of months from the BOJ. That would be positive for stocks, except for probably for financial stocks and bank stocks here in Japan. And also would suggest that you're going to see a weaker yen in the near term in the absence of a major pivot from the bank.
All right, thank you so much for the terrific update. Groyd Raidi there in Tokyo joining us this morning. Now, Indian policymakers and regulators are also stepping in to calm investor nerves as the stock rout in the Adani Group enters its third week. Under the cloud of the Adani crisis, India is playing host to its first major event under the G20 presidency. Well, for more, let's bring in our reporter in Mumbai, PR Sanjay. Sanjay, thank you for joining us. I'm looking forward to the briefing on Monday. How bad is the week going to be? How's the government so far responded to the Adani crisis?
So almost all agencies, including rating agencies, finance ministry, regulators, they've all stepped into this crisis to cool off the investor sentiment. And in the rarest instance, we also saw that the central bank, the Reserve Bank of India, have also stepping in to say that all affairs of the banks are okay. And the banks have also come out with a statement saying that their exposure to this port to power conglomerate is within the limits, and this did not cool off the investors. And now the latest what we are seeing is that the Adani Group founders, or rather family, is now prepaying all the pledged shares to restore the confidence. So, and meanwhile, the opposition party has also demonstrated some protest in front of Gandhi statue in the capital. So things are, gathering pace. One will have to wait and watch whether they will take to the street or not with this Adani protest.
Sanjay, thank you so much for the update. We'll keep a very close eye on everything going on with Adani. Bloomberg's PR Sanjay in Mumbai. Now, the other big story, of course, is the Renault-Nissan story. Our Bloomberg's Tom McKenzie is on the ground. We're getting some pictures coming in with some of the things that we've learned so far. Now, this, I have to say, has been quite a long time in the making. Remember, this goes back to what happened with Carlos Ghosn all those years ago. It's interesting to know that the presentation and the landmark deal to reshape the alliance between Renault and Nissan has been happening in London. So they signed a deal this morning aimed at easing these long-standing tensions between the two companies, and it really is, we hope, allowing them to move forward at a time of unparalleled challenges for the automotive industry. Now, what this means is that the agreement includes some joint development of several new models. And of course, as part of the pact, Renault will cut its holding in Nissan to 15% from 43% to rebalance some of the lopsided capital ties. Well, Bloomberg's Tom McKenzie will be speaking to both chief executives of Renault and Nissan in an exclusive joint interview that's at 10:15 a.m. London time today, so stay with us for that. Coming up, we'll have more on the alliance. We'll have more on some of the challenges, including the several industrial projects for car makers. This is Bloomberg. what do you like most about your job?
I think the people. I mean, ultimately, we're a people business. A lot of what my job is as CEO of the company is to give those people sort of motivation, to tell them where we're going, to encourage them to come up and do their best work, to encourage them to collaborate. Sometimes you sort of think you're almost a psychologist, as you are a business leader, I think, sometimes.
And so what's your best piece of advice?
I love pitches. I love being sort of leading from the front, if you like, and spending times with teams. I love to see the work that we're doing. When we pitch for a piece of new business, often when we come together. So I guess I try and put myself in the seat of the client. And what's the client going to think when they see this work? Are they going to be excited? Is it going to turn their brand around? How's it going to resonate with their consumers? So as much as possible, I think probably I try and play that role.
The top names in business are on Bloomberg.
More and more people are frightened of the realities of today, and that's manifesting in so many areas. Why would anybody put something into a 30-year obligation unless you believe something is better in 30 years? I'm not here to suggest it's going to be rosy in 2023, but what I'm saying for long-term investing, it's a better environment for long-term investing today than it was 2 years ago.
Nobody covers business like Bloomberg, your global business authority. Information you want, analysis you trust, everything you need to get set for the start of U.S. trading. Watch Bloomberg The Open with Jonathan Ferro. Weekdays on Bloomberg.
Welcome back to the Open, everyone. 40 minutes into the European trading day. A lot of pressure on stocks. This is because of better than expected, much better than expected U.S. jobs reports on Friday. What does that mean for hikes? And then tensions over U.S. and China. Now, Renault directors have agreed to a landmark deal to rebalance the car maker's 2-decade-old alliance with Nissan. The deal is aimed to easing long-standing tensions between the two companies. Well, joining us now is Bloomberg's car czar. He's Craig Trudell. Craig, it's actually quite refreshing not talking to you about Elon Musk and Tesla. So what's the latest on Renault-Nissan? What kind of a capital structure are we looking at?
Yeah, so today, a confirmation of something we've known for some weeks now, that Renault, very importantly, is going to take a big chunk of their ownership in Nissan and put it in a French trust so that the two companies have an equal cross-shareholding arrangement where each of the companies own 15% of one another. It's going to take some time, perhaps years, actually, for Renault to go about selling its Nissan stake. A lot to be worked out in terms of what the particulars are going to be, how much of a hurry Renault is. We can presume, of course, that they're going to want to take their time because Nissan's valuation is quite depressed at the moment. Yeah. And Nissan probably doesn't want this much shares coming onto the market so quickly. They're likely going to want to purchase a good chunk of this themselves.
But Craig, these car makers and automakers have like a million things to deal with, right? Are they a software company? Can they be EVs? Do they have enough battery? Is this like a geopolitics like France versus Japan, or does this actually put them on a better footing to take on the market?
I think that absolutely is coming into play, and it plays into the fact that this is such a long time coming. It was a year ago that Renault's CEO talked about wanting to break up his company and set up a sort of dedicated electric vehicle and software entity, separate combustion and hybrid engine entity. There's really a lot of complexity here to sort of go about realizing that plan. And it's been very challenging to do that because of the French state's involvement, because Nissan has some concerns about intellectual property and sort of sharing IP with new partners. So this has been very complex, and this has really started just the sort of the beginning of formalizing that, in the sense that they're going to further this agreement hopefully by the first quarter, and then have something more definitive by the end of this year. So we're still going to be at this a while.
How do you think they'll do overall? So in 5-10 years, what does the car maker landscape look like? And are they going to be one of the big players still?
I think there are a lot of questions about whether the sort of alliance or venture approach makes sense for the long term. I think we're seeing more of it as opposed to less of it in the industry because of the high cost of bringing these new models to market. Making this big switch in powertrain from combustion engines, and something that the industry knows quite well to batteries and software is something that they don't have as much expertise in. But in the long term, do we see companies start to move away from this in order to be a little bit more agile, so it doesn't take them years to formalize something that they've decided they want to do.
Yeah, what's your killer question for the executives? Are you finally going to get along?
Are you finally going to get along, and is this the beginning of the end of your marriage, as opposed to a new chapter, and does this kind of make everybody happy and put to bed all of these grievances that have built up over the years?
Craig, fantastic as always. Thank you so much for joining us. Bloomberg's card czar, Craig Trudell. And of course, don't miss that exclusive interview that our Tom McKenzie will bring us a little bit later on. Now let's get straight to the Bloomberg First Word News with Laura Wright. Hi, Laura.
Hi, Francine. Hundreds of people have been killed in an earthquake that ripped across the border between Turkey and Syria. The quake measured 7.7, one of the most powerful to hit the Middle East in years. It was centered near the Turkish city of Gaziantep. Hundreds of people are said to be trapped. The yen fell on a report BOJ Deputy Governor Masayoshi Amamiya has been approached to become the central bank's next chief. The Nikkei says the government and ruling coalition held discussions with Amamiya on succeeding Governor Haruhiko Kuroda, whose term ends in April. But the government has refuted the report. Dell has become the latest tech company to announce massive job cuts. It will eliminate a little more than 6,600 jobs, about 5% of its global workforce. Dell is facing plummeting demand for personal computers. The G7 and EU's $100 a barrel price cap on Russian diesel, meant to limit Moscow's revenues, has taken effect. A G7 statement says the cap applies to petrol products trading at a premium to crude. The Western groups also back a limit of $45 for those that sell at a discount, such as fuel oil and some types of naphtha. They will also delay reviewing a $60 cap on Russian crude until March. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Laura Wright. This is Bloomberg Francine.
Laura, thanks so much. Laura Wright in London. Now let's look at what stocks are on the move with our Joe Easton from our equities team. I have to say, Joe, looking very sharp also for a Monday morning.
Thanks very much, Fran. Yeah, a bit of a wedding vibe going on today, but I think it works. So let's look at the stocks that we've got today. Idorsia, this stock is slumping as much as 15% over in Switzerland. This is a €3 billion pharmaceutical company announcing some disappointing drug data for one of their hemorrhage products. Analysts saying really disappointing, given that that product is already on the market in some countries, including Japan. That stock down sharply. Another stock that's falling today is Hargreaves Lansdown over in the UK financial space. Analysts at Credit Suisse cutting that one to underperform, warning that Britons will have less savings each month now because of the cost of living crisis, fewer funds to put in their accounts at the end of each month and invest in the retail stocks market. That one down around 2.4% at the moment. And then finally, the cheapest pun I'm going to make all week, Angry Birds are flying over in Helsinki. Rovio, the maker of the viral mobile phone game, considering a takeover bid from an Israeli firm called Playtika, valuing the tech company at around $810 million, according to latest reports. That stock still down around 50% since it went public in 2017. So I think the shareholders almost as angry as the birds on that one, Fran.
Very good, Joe. You're all set for the tabloids. I have to say, my kids reminded me not only are Angry Birds back in fashion, but also Pokemon.
Yeah, I mean, I was a big fan of chasing them around the car parks a few years ago. That was good fun.
There you go. They're back with a vengeance. Joe Easton, thank you so much with the stocks to watch. Now, we're also getting breaking news out of Renault and Nissan. Our card czar, Craig Trudell, had a terrific briefing on exactly what this means going forward. Renault and Nissan did sign a deal aimed at easing long-standing tensions between the two companies. This really should allow them to move forward at a time of unparalleled challenges for the automotive industry. Interesting to see that presentation in London, maybe on neutral ground. And then our Tom McKenzie will be speaking to the chief executives of both Renault and Nissan in an exclusive joint interview. Don't miss it. It's at 10:15 a.m. London time. Stay with us for that. And this is Bloomberg.
expensive cities have a lot going for them. But if you live in one, you've probably noticed that these big, expensive cities keep getting more, well, expensive. You could always move away. You might have just started working remotely, so there's really nothing keeping you there. But then again, moving is a hassle. Well, what if someone paid you 10 grand to do it? What if they threw in free office space, a bicycle, or a gym membership? Programs in cities and states around the US are doing exactly that, and they're getting a lot of interest.
We've had over 50,000 applications.
About 90,000 applications.
We've had over 1,800 applicants from all over North America.
So are these nascent programs actually beneficial to their communities and the workers joining them? Or are they little more than flashy advertising campaigns for places looking for an injection of fresh talent?
This is Bloomberg.
If we see a moderate rebound of Chinese economy, we expect this year about half of the growth in global oil demand will come from China only. But this is a moderate, and maybe as some international financial institutions claim, Chinese economic rebound may be much stronger than expected. This will put some higher upward pressure on the demand side.
The IEA Chief Executive Director, actually, Fatih Birol, speaking to Bloomberg on the demand for oil and natural gas. Now, we just need to correct also breaking news that we had earlier on. Adani founders will repay this $1.1 billion share-backed facilities. We had earlier reported that it was Adani Transmission, but actually it's the Adani founders. So just a little correction. I don't think it changes anything in terms of the big narrative of the story, which is we're in the third week, of course, of the Adani story, and we're expecting more news to come out of it. Now, shares in Newcrest Mining have jumped after the world's largest gold miner, Newmont, offered to buy the Australian company for $17 billion. The deal would strengthen the U.S. mining powerhouse's position in copper and gold. Well, for more, we're joined by Bloomberg's Lizel Hill. Lizel, thank you so much for joining us. So first of all, good morning. Are we going to get a lot of consolidation? So this is a huge deal, $17 billion. What does it mean that, you know, what the sector will live through?
Yeah, it's an interesting one. It's the sort of ideas that is being driven by this decrease in limited reserves that we're seeing in the gold mining industry. So for the gold companies wanting to go out, replace their reserves, keep their production going, one of the big options obviously is deals. And then the other thing is costs. We've seen cost pressure across the industry, and so the economies of scale for a company like Newmont to go out and increase its production definitely makes sense to go for a big target like Newcrest.
But Lizel, so there was a couple of years ago already quite a big consolidation phase, right? So if you look at the industries worldwide, I guess the mining and especially gold and copper had already consolidated. So what's left?
Well, Newcrest, definitely, for one thing. We got Newmont, in fact, in particular, in the last round was one of the big players. They took a stab at talks with Barrick Gold, which is the other big giant, and bought Goldcorp to become the biggest producer. So I think one of the big questions now in terms of consolidation is what Barrick does. The CEO, Mark Bristow, he has been a prolific deal maker, but has also been quite a vociferous opponent of high premiums in the industry and has criticized the industry. So it'll be interesting now to see if he feels pressure to either go and do something else or step in and make a bid for Newcrest.
Lizel, do they have to pay a premium? I mean, could we enter a bidding war, actually, to be able, because there are so few assets left?
Absolutely, that's a potential. I mean, Newmont, rather, is already offering a premium of around 20% in its share proposal for Newcrest. So if anyone else wanted to come up on top of that, there's certainly the potential for things to go higher.
What does it mean? I mean, overall, we have, of course, the China reopening. I don't know how much demand that will lead for gold and things like that, but what are the stories that you're working on going forward?
Well, the big theme in gold recently has been potentially China-related in that there's been a lot of central bank purchasing And we have seen China increasing its reserves in gold, and that's been a big support for the gold price in the last sort of 6 months or so. Another thing is Newcrest is also a reasonably sizable copper producer. And there we've seen, lots of the themes around potential shortages down the road, electrification driving demand, and of course for China's reopening around construction manufacturing. That's also a big theme there as well.
So, Lisa, I mean, and we talk about, of course, China, going into especially other parts of the world looking for rare earths. What's the one commodity that will run out of, quicker than others? I don't know whether copper is one of the biggest components or whether it's the lithiums that are needed also for the energy transition.
Yeah, absolutely. I mean, all of those things. I think copper is the one that gets a lot of attention because similar to lithium, it does go into EVs and it's needed for batteries and making cars, but also just more broadly for the electrification theme, whether it's grids, all that sort of thing, where it does seem there's a lot of narrative around the fact that in the next few years, maybe not right now, but in the sort of 5 to 10 years period, the world is looking at some sort of shortage of copper.
Liesl, thanks so much for joining us. Liesl Hill there from our commodities team. Now, we're also getting some breaking news out of Renault and Nissan. This is a historic alliance, or at least an untangling deal aimed at easing some of the long-standing tensions between the two companies. And this really allows them to move forward at a time of unparalleled challenges for the automotive industry. Now, Nissan does intend to invest in Renault's electric vehicle business, Ampere, for as much as a 15% stake in the entity that's being separated from Renault's combustion engine and powertrain operations. Of course, our Tom McKenzie will be speaking to the chief executives of both Renault and Nissan in a joint exclusive interview. That's at 10:15 a.m. London time. Also, what we look at is some of the equity futures in the U.S., but also European stocks declining on an unexpectedly strong U.S. jobs report, raising the prospect of more rate hikes from the Federal Reserve. There is also concern over U.S.-China geopolitical tensions. That's weighing on sentiment. And then, of course, we look at yen. That's it for the European Market Open. Surveillance Early Edition is up next, and this is Bloomberg.
Coming out of World War II into the 1950s, you mentioned that the Fed had imposed yield curve control, basically to finance the wartime deficit. They were trying to move off of that. These are all sort of familiar themes to anyone in 2022, but why was that difficult for them?
Well, so let's get a sense of scale, right? Mm-hmm. So in 1941, there's about $40 billion worth of treasuries outstanding. In 1945, there's about $240 billion worth of treasuries outstanding. So that's about double the pre-war GDP. If you scale that to 2019, say, okay, COVID expenditures on the scale of World War II, that's about $40 trillion. And the question is, who's going to buy it? Yeah.
And so what we're dealing with is kind of nothing. We got it.
In that context. And so that's where I guess the analogy breaks down. But it's a very difficult problem, which is who's going to buy the equivalent of $40 trillion today in debt?
is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Stocks and futures fall as Friday's surprise jobs report sparks concern of ongoing Fed rate hikes. The yen weakens on a Nikkei report about a possible BOJ succession. The U.S. launches a mission to salvage what officials believe to be spy equipment from a downed Chinese balloon. Beijing says it reserves the right to respond as tensions flare. Plus, a powerful earthquake in southern Turkey kills hundreds in the region, with many more injured and trapped. The quake was felt as far away as Lebanon, Israel, and Egypt. We'll have, of course, a full report from our reporters on the ground in Turkey, but let's also look at market sentiment. Now, this is on the back of geopolitical tensions between the U.S. and China, and on the back of that surprise, very strong report, jobs report out of the U.S. on Friday. Now, on the back of that, there's, of course, more priced in terms of Federal Reserve hikes. Not only Federal Reserve, but this could touch a lot of the other central banks around the world. If the economies hold on stronger, certainly the labor part, because of these tight labor markets. European stocks down 0.6%. U.S. futures, certainly the S&P, also seeing similar declines. And then there's concern over the U.S.-China geopolitical tensions weighing on sentiment overall. U.S. dollar is one we need to keep an eye on, as is, of course, sterling. We're going into about 100,000 nurses and I think 10,000 ambulance workers striking this week. Sterling 120.59. Now, there's not a huge difference in terms of what we're seeing for the FTSE or the DAX or the CAC 40. They're all down between 0.7 and 0.8%. We'll keep a very close eye on anything that's happening on markets. Now, hundreds of people have been killed in an earthquake that hit along the border between Turkey and Syria. The quake damaged highways, an airport, and the local natural gas network. Onur Ant, Bloomberg's Turkey Bureau Chief, joins us now. So, Onur, what exactly is the latest on rescue efforts?
As you said, Francine, more than 500 people have been killed in the earthquake that took place this morning, and there are hundreds of more trapped in buildings. According to Turkish authorities, more than 1,700 buildings collapsed on the Turkish side of the border alone. That means the death toll, which now stands at over 500 for the two countries, is likely to see a dramatic rise in the coming hours. And rescue operations are underway in Turkey, as well as international aid assistance is also on the way from countries like US, Israel, and Azerbaijan.
So, Onur, why have oil flows to Mediterranean ports been halted?
Turkey did halt the oil flows to Ceyhan oil terminal on the Mediterranean coast. This, according to Turkish officials, is out of precaution. No leaks or damages have been detected on the oil pipeline. Still, though, they did halt the oil flows just to be sure. And to be clear, that terminal gets oil both from Azerbaijan and Iraq. And back in January, the daily average oil flow was about 1 million barrels a day.
So, Onur, what international help has been offered so far?
So far, U.S., Iran, Israel, India, and Azerbaijan, as well as European Union, have all offered help. And Turkey's Interior Minister Süleyman Soylu, for the first time in recent memory, as far as I can recall, has said that Turkey activated a level 4 alert. That basically means that Turkey is open to international assistance, and rightfully so. The area that we're talking about is home to millions of people, nearly 10 million. The temperatures are terrible there right now. We expect snow in the coming hours and days, so it's a race against the time, and Turkey needs to keep the victims of the earthquake out of the area and into shelters as quickly as possible.
Onur, thank you so much. Onur Ant there with the very latest, of course, on this extremely sad news, and all of our best wishes goes to the family and, of course, to the rescuers that are there on the ground. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The yen fell on a report BOJ Deputy Governor Masayoshi Amemiya has been approached to become the central bank's new chief. The Nikkei says the government and the ruling coalition held discussions with Amemiya on succeeding Governor Haruhiko Kuroda, whose term does end in April, but the government has refuted that report. Now, Dell has become the latest tech company to announce massive job cuts that will eliminate a little more than 6,600 jobs, about 5% of its global workforce. Dell is facing plummeting demand for personal computers. Beijing has shifted from expressing regret to threatening retaliation after the US shot a high-tech Chinese balloon out of the sky. China says the device was a civilian climate research vehicle that unexpectedly drifted over US territory. Beijing has denounced what it calls Washington's clear overreaction in using force. Secretary of State Antony Blinken postponed a scheduled trip to Beijing, calling the balloon an airspace violation. And Beyoncé is now the most decorated Grammy winner in the awards show history with 32 wins. It's after the singer won 4 awards, including for Best R&B Song. That's thanks to her album Renaissance. But she missed out on the top prize, losing out to Harry Styles, who walked away with the Album of the Year honor. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, the U.S. added more jobs in January than expected, while the unemployment rate fell to a 53-year low. Now, Bloomberg TV guests have been weighing in on the latest data and what it actually means for the Fed.
This is yet again a soft landing type of report.
Totally on fire.
Undoubtedly a strong number.
Wow. Stunning, awesome, great for the economy.
It's still a labor market that is too hot.
The job market's likely to remain hot, posing a real challenge for the Fed.
The market's been pricing in Fed easing in the second half of the year. These numbers don't really support that.
The Fed still has more work to do than the markets think.
They should have done 50 and then stop.
The Fed should go 50 and get out of the way and let the system do what it's going to do.
The Fed's not likely to revert to very large rate increases.
All they can do at this point is just sort of extend out the 25s.
The possibility of a policy error here is quite significant.
Well, joining us now is Jeff Yu, Senior EMEA Market Strategist at BNY Mellon. Jeff, I'm so happy to speak to you, especially on a big day like today. I mean, we had that jobs report on Friday that was really a blowout, unexpected. What does it mean? I mean, the markets seem to finally latch on to the fact that, rates could go up even more.
And I think it's about time, to be honest, right? So I think two things there. One is, rates need to continue to rise. I think we need to acknowledge the labor market is in a good place. Maybe there are some distractions, from the avalanche of the tech sector layoffs, but the services sector clearly is doing really well. But secondly, it's less about where headline rates go. It's about how long are they going to stay at a relatively high level. I think that's the second phase, which markets, need to be ready for. I don't think they want to price that in yet.
Why? Yeah. Why do markets? I mean, the Fed officials keep on saying, like, guys, and theoretically, you can go from 9% inflation, 6%, but that 6 to 3 to 2 is going to be painful.
Right, indeed. And we think that we will need to see outright declines in job losses, not just 1 month, maybe beyond, for the Fed to even start to think about cutting rates. So the bar is actually quite high there. On the flip side, I think markets also need to acknowledge, good news can be good news. For once, hey, it's a good labor market. US is doing well. China's reopening. Eurozone, slightly better place. So what's not to like? So that may actually push risk on as well.
How many? You're not expecting more hikes, are you? Is it just that they stay at this level for much longer?
So we are expecting to shift to 5%. Maybe higher, but 5.25, that kind of a range, but for it to stay for longer, we've held the view towards the end of last year, even that. So the bar for Fed cuts from whatever level, right, for this year, extremely high, and we still stand by that case.
Jeff, is that, across the board? So is there a pricing or hope in the markets that we're going to see also a BOE pivot, that we're going to see an ECB pivot, which is, if they stick to the 2% inflation target, will not happen for a while?
I think the market's given up on the ECB pivot. To be honest, looking at our own internal flow data, so euro longs are very, very much extended, even though they are hawkish right now. I'd say the UK is probably, so the BOEs are definitely up there in terms of candidates, for a pivot. I think from the BOE's point of view, all the upcoming hikes, whatever they may be, they're going to be contingent upon data. So there's a lot of downside risk there.
So given what you explained so beautifully and simply, what does it mean for where you want to put your money right now? What should strategies be looking at buying?
Short term, I think dollar will continue to be mixed in terms of performance. Again, we're looking for euro dollar to come down ever so slightly. But end of the year, eurozone Eurozone's in a good place, especially we're looking, for margins to start to improve Eurozone because energy prices are coming off. Sterling, we certainly don't like. One currency I'm looking at closely right now, Swiss franc. Our data showing very, very underheld. So there are shorts out there. It was used as a funding currency, but it's a high beta trade. For the Eurozone, S&B have been clear. They can hike rates. They can sell down their portfolio. They can buy Swiss francs as well. I think that's one of the cleanest trades out there.
But yeah, so how do you play actually Swiss franc?
So I think on the crosses that would work best. So Euro Swiss tends to actually go up during a good Eurozone time. So sterling Swiss lower. We're looking at Scandinavian currencies lower against the Swiss franc as well. Both Riksbank, Norges Bank signaling their peaking rates as well.
Okay, Jeff, thank you so much. As always, Jeff Yu, Senior EMEA Market Strategist at BNY Mellon, stays with us. We'll talk a lot more about yen. Coming up, BOJ succession. The central bank's deputy governor has been reportedly approached for the top job. So we have all of the details next. This is Bloomberg.
We have only 8% of the ocean protected today, and our Earthshot is, as Patty said, 30 by 30. 30% of the ocean, at least 30% of the ocean protected by 2030. And we know that if we protect the right 30%, not only we will prevent the extinction of many marine species, but also we will produce more fish. There's going to be, these protected areas are going to produce a spillover that will exceed the foregone catch. So we're going to have more fish to eat, food security, livelihoods for people. And we know that for every dollar that we invest in a protected area, in a marine reserve, that produces $10 in economic output and creates more jobs. So it's a triple win for marine life, for food security, and for climate, and of course, for the economy. So that's the goal, the mission.
News breaks. No one covers the world like Bloomberg.
Return to pragmatism is really that everybody's in line. The government, the enterprises, the people in pushing this economy. It's like a cycle of renewal.
Big tech layoffs rolling in. Spotify, the latest to tighten its belt with plans to cut 6% of its employees.
Is the economy unfolding as you thought it would?
I think the economy is responding to work that the Federal Reserve is doing.
Bloomberg, your global business authority.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the yen fell after the Nikkei reported the BOJ Deputy Governor Masayoshi Amamiya has been approached to become the central bank's next chief. The government, though, has refuted the report. Well, let's bring in back Jeffrey Yu. He's Senior EMEA Market Strategist at BNY Mellon. Jeff, thank you so much for sticking around. We're talking a little bit about, of course, Fed dollar trajectory. You said, look, one way to play maybe some of the uncertainties is through Swiss franc. What do you do with yen right now?
So yen, I think it really is becoming binary. The market's probably learned its lesson. So in two ways. Anything can happen out of the ordinary at BOJ meetings. But secondly, I think with the last meeting or so, it's important not to place too much of an emphasis on an individual meeting, especially with Governor Kuroda coming off. But it really is about QQE, not YCC in my view, but QQE. Yeah. If they abandon QQE, unwinding, so to speak, Governor Kuroda's entire legacy, then we can look at another 20 big figures in dollar yen very easily.
Do you think they will? And actually, is it enough? If you look at some of the names that are out there, is it enough to give us a sense of what kind of policy they'll put in place?
If pushed, I'm still at 50-50, right now. I think they should. That's the sense. I think it's more about signaling that Japan is in a new environment with stronger inflation pushing things forward. But we know how, in terms of the relationship between the MOF and within the Japanese government and the BOJ works, things tend to be a bit slower, right? So I think we'll take another good quarter or two. We're going to get the appointments very, very shortly. But that is the direction. So dollar yen certainly lower. So that is the direction we're looking for. But getting rid of QQ make the difference between, say, 125 year end and 110.
Jeff, what do you think is priced in right now? And again, we had this big surprise in December. Is like 30% of a possible change in policy priced in or less?
I think a bit more than that, but what kind of a change in policy? So if it's going to be steady increases in the YCC target, I actually don't see that as a change in policy because you're still sort of expanding the balance sheet, right, to tighten. That doesn't really make too much monetary sense, right? So, but the chances of a wholesale abandonment of QQE, I think that's actually below 30% or even 20, something like that being priced in. But again, that's where the larger risk reward is for dollar yen lower.
Jeff, let's also go back to the Bank of England because we have Catherine Mann, really one of the most hawkish members of the BOE's 9-member MPC committee. So she's basically saying the BOE's next move is likely another rate rise. We kind of thought last week, and then we caught up with the Governor Andrew Bailey, that it could have been one and done.
So I think on balance, they're looking at the inflation numbers, and crucially, they're looking at the risks, right? So he was heavily skewing the risks to the upside, but not pre-committing in the same way that Madame Lagarde was actually doing. So there's the clear difference, between euro and sterling, and why euro sterling should trend higher, towards mid-year and year-end as well. So if we start to see, let's say, a sudden sharp deceleration in inflation and forward indicators, which the governor has hinted at, then maybe they will look at a pause. But so far, I don't think they're there yet. 25 basis point increments. I think we can get to 450, not higher for sure. But the risk is going to be still hawkish talk, but less action.
So what are you expecting? 25 basis point hike, and then that's it for the rest of the year? Or they look at, of course, all of the tightening that they had last year and what that means, for example, for the labor market?
They can actually start to space things out. So they do another 25 and then just hold them for a while. So they have, as you say, they have been talking about, let's see what the overall impact is going to be. They stressed that during the comments last week. A lot of tightening has really taken place. And also they need to look at the housing market as well. So mortgage resets, that eats into household income.
But the labor market in this country is so tight and could remain tight for a long time for a number of reasons. What does that mean for hitting that 2% inflation target?
Well, here's where I think the BOE would have to say we had an inflation target, so the jobs mandate, the growth mandate is probably not entirely on their mandate. So if inflation's still well above, then they need to actually move. But then they risk finding out they've done too much only after the fact.
Okay, Jeff, as always, thank you so much for joining us. Jeffrey Yu there, Senior EMEA Market Strategist at BNY Mellon. Coming up, U.S.-China tension ballooning as the U.S. shot down the alleged Chinese spy balloon off South Carolina. We have China's latest response next, and this is Bloomberg.
Tuesday, President Joe Biden delivers the State of the Union address. Join David Weston and Bloomberg's top political reporters and analysts live from the Bloomberg headquarters in Washington, D.C., as President Biden lays out his plans to tackle the war in Ukraine, Congress's debt limit standoff, immigration, and more. And stay tuned after the speech as we break down the Republican response. Special coverage starts at 8:30 p.m. Eastern, simulcast on television and radio, only on Bloomberg, your global business authority.
CIO Dawn Fitzpatrick are the exception in finance, not the rule. Morningstar has taken an in-depth look at women in the industry, and the numbers are startling. The firm found that in 2020, women made up 14% of global fund managers. That's largely unchanged from the year 2000. Morningstar also calculated that while the number of women at the top of the corporate ladder has increased, it won't be until 2060 that women will reach parity with men in the C-suite. Studies have shown that increasing the number of women managers leads to better decision-making and moderates overconfidence. European Central Bank President Christine Lagarde insists that male domination of the banking industry made the 2008 collapse of Lehman Brothers more likely. As Lagarde put it, if it had been Lehman sisters rather than Lehman Brothers, the world might well look a lot different today.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
DOJ or other authorities
could face bigger challenges next.
It was going to keep rain while cup. This is a 3.
As the economic picture does.
The BOK is getting ready to make this decision. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Dell has become the latest tech company to announce massive job cuts. It will eliminate a little more than 6,600 jobs, about 5% of its global workforce. Dell is facing plummeting demand for personal computers. Now, Carlyle Group has a new CEO. Bloomberg's learned the private equity giant has chosen former Goldman Sachs co-president Harvey Schwartz. The announcement could come as soon as this week. Carlyle has grappled with management turnover the last few years. Elon Musk says Twitter is on the right track after a tough 3 months. In a tweet, the billionaire says the company is trending to break even after he had to save it from bankruptcy. Musk says he had to juggle the rescue of the social media platform and handle responsibilities at both Tesla and SpaceX. US-based Newmount has made an offer to acquire Australia's top gold mining, Newcrest. The potential deal values Newcrest at about $17 billion. It comes as Newcrest searches for a new CEO following the December resignation of their old one. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, Washington has launched a mission to salvage what U.S. officials say is a surveillance balloon from China after shooting it down off the South Carolina coast over the weekend. Beijing has warned the U.S. to not escalate the situation, insisting that the balloon is a civilian aircraft that strayed off course.
We should stress that this is an unexpected incident caused by the force majeure, and the U.S. Department of Defense also said it will not present any military or physical threats to people on the ground. Despite China's explanation, the U.S. use of force is overreaction.
Now, for more on all of this, let's bring in Bloomberg's Bill Ferries. Bill, what are the implications of this continuing crisis on Antony Blinken's trip to China?
Well, we haven't heard from the U.S. on when that trip will now take place after being delayed, but it will possibly change the tone and what can really come out of the meeting. It will be very interesting when this debris, if it's found, is brought up and the U.S. is able to provide a little more information on where it came from, what companies may have been involved, and what kind of technology it had. And that will all play into the Secretary of State's likely trip to Beijing.
So could there be a retaliatory move from China?
Oh, I certainly think it wouldn't be unexpected for the Chinese to maybe take some initiative against U.S. assets in the Indo-Pacific, whether that's, it could be the ships that are going through the region. They're certainly going to try to make the U.S. Maybe look as embarrassed as I think China has in this case. And I think on the U.S. side, if they are able to identify a company that was involved in this technology, the balloon technology, there could be additional sanctions on the U.S. side as well. So I think both sides are trying to game out what the next steps in this crisis will be.
Bill, just remind us that this is not the first time that it's happened. Why is this so extraordinary?
Well, I think the difference between this and previous episodes is that this balloon was spotted publicly over the U.S. While it was still floating. It became a bit of a spectacle and an embarrassment. And I think politically, a lot of pressure was put on the Biden administration to somehow to react to this. And so you saw that shoot down taking place on Saturday. In the past, what we've been told is that officials weren't sure where these balloons were coming from, what they were doing. The information came much quicker this time.
All right, thank you so much. As always, our Bloomberg Senior Editor for Asia, Bill Ferries. Coming up, Tina Lee, Chief Executive Officer of Deutsche Bank UK and Ireland, joins us for an exclusive conversation on attracting the next generation of investment bankers. That interview is next, and this is Bloomberg. What do you like most about your job?
I think the people. I mean, ultimately, we're a people business. A lot of what my job is as CEO of the company is to give those people sort of motivation, to tell them where we're going, to encourage them to come up and do their best work, to encourage them to collaborate. Sometimes you sort of think you're almost a psychologist, as you are a business leader, I think, sometimes.
And so what's your best piece of advice?
I love pitches. I love being sort of leading from the front, if you like, and spending times with teams. I love to see the work that we're doing. When we pitch for a piece of new business, often when we come together. So I guess I try and put myself in the seat of the client. And what's the client going to think when they see this work? Are they going to be excited? Is it going to turn their brand around? How's it going to resonate with their consumers? So as much as possible, I think probably I try and play that role.
Good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets. China open.
This is Bloomberg Technology.
To our television and radio audiences worldwide, welcome now to Balance of Power.
This is Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg. Top experts. Great questions.
European stocks fall as Friday's surprise jobs report sparks concern of ongoing Fed rate hikes. The yen weakens on a Nikkei report about possible BOJ succession. The U.S. launches a mission to recover what officials believe to be spy equipment from a downed Chinese balloon. Beijing says it reserves the right to respond as tensions flare. Plus, a powerful earthquake in southern Turkey kills hundreds in the region, with many more injured and trapped. The quake was felt as far away as Lebanon, Israel, and Egypt. Welcome everyone to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Deutsche Bank is looking to attract students in the UK who are interested in investment banking. Now, together with Queen Mary University of London, the German bank has launched a new investment banking apprenticeship program. It comes after the lender announced it's preparing to cut more jobs to keep costs in check. Well, here with us is Tina Lee, Chief Executive Officer for the UK and Ireland at Deutsche Bank. So, Tina, thank you so much for coming on. First of all, talk to me about this apprenticeship program. Did you identify a need to have a more, diverse investment banking group, or is it really to try and entice students to come into the jobs market earlier?
Actually, it's both. So I think all large organizations are looking to tap into different pools of talent. So this program is going to be targeting students that have completed their A-levels. And probably what's different about this to your normal graduate program is they'll get a real mix of on-the-job training, either through our origination and advisory business or, in fact, our FIC division as well. So what they'll be able to do is to actually also deliver on the academic module side, and at the end of 4 years, come out with a degree in applied finance, and therefore they can then apply for a full-time job at DB.
So is this because you're concerned that otherwise investment bankers have too much of a similar CV, that everyone sounds and did the same education, or is it because you just don't have enough people that you can bring into the industry?
We have plenty of applications, so the number of applications is not our problem. So what we do want to do, however, is really make sure that we have a diverse pool of candidates. So really what we think with the apprenticeship programs is we'll be tapping into perhaps students that have a different socioeconomic background, and most importantly, identifying young talent that perhaps don't have the network of family, friends, or indeed schools that so often help young people navigate the many options that there are in investment banking. So this type of program will help fill that gap.
And are you expecting other banks to really join? Is this going to be a concerted effort to really make a difference, or will it be only 15, 20, 30 students a year?
So I think that lots of organisations are going to be looking at these types of schemes. What has helped, of course, is that Deutsche Bank is subject to the apprenticeship levy here in the UK. So what we've been able to do is redirect that levy into reinvesting in our workforce through programmes such as this.
Tina, on a day-to-day basis, I know that you're going through also a huge cost-cutting program. What's the most difficult decision on how you resize and cut costs?
So costs is an area that we will continue to have a laser focus. We had our results last week, so we already saw our cost-income ratio actually fall by 10% over the full year 2022. But we do have to really maintain a laser focus on costs, particularly with regard to the broader inflationary environment. So we're looking to keep our non-interest expenses flat to 22, whilst at the same time looking to strategically adjust headcount. So we did see a tactical headcount reduction in some of our businesses in Q4 of last year. But more broadly, we think we're actually very well positioned for the cycle at this stage for 23.
What does it mean for hiring? Are there places actually where you could hire and also pay people maybe a little bit more?
Of course, and we always look to remain competitive, and there will be areas that we're looking to grow our businesses. So we will always continue to monitor those products, particularly where there are adjacencies to our existing businesses, where we can also see increased customer demand.
We've had a number of conversations over the years about, what the clearinghouses look like, or the closeness between the UK and the EU post-Brexit. What's it looking like now?
I think we're very much a steady state at this point. Yes, in 2025, there is steps to sort of move more clearing activity into the EU. But I think at this stage, I think we're very well positioned, and all our planning is now done. So we're very much in a business as usual state.
How has Deutsche Bank changed since Brexit? Where have you seen growth, and where have you seen less growth?
So, of course, over the last couple of years, we've seen a lot of growth within our FIC business, and a lot of that has been around client demand and needing to hedge through what has been a very challenging macroeconomic background. But, of course, in this rising interest rate environment, what we have started to see is our other businesses really start to contribute considerably, particularly our more stable businesses, such as the corporate bank and our private bank.
Do you worry about UK markets in general? We've seen quite a lot of leverage, but we haven't really seen an event, something go bust or go bankrupt because of this, huge rise in interest rates that has happened in the last 12 months fairly quickly. Is that a surprise?
Yes. I don't think so, and certainly when we think about our credit loan loss provisions, even for 23, we think it's going to remain fairly consistent. So, of course, we continue to monitor, and there may be certain events which take place that are unforeseen. But given that we are anticipating that there's going to be a shallower and shorter recession here in the UK, we don't necessarily think that that's going to result in increased loan loss provisions.
So how's business looking like in the next 12 months in the UK?
It's looking pretty good, actually. I think we're very positive. Don't forget, we've come out of a 3-year strategic overhaul. So in terms of where we want to invest and where we're relevant to clients, I think we have the right business here in the UK to build on the progress that we've made over the last couple of years.
Is the government serious in trying to attract, a bigger pool of capital, maybe from foreign investment, or even, I guess, loosen up regulations so that more companies want to list in the UK?
I think so. I mean, clearly this is a government that wants to listen to business and wants to listen to financial services. So the Edinburgh reforms, which were announced at the end of last year, I think is a step in the right direction. And we also have the Financial Services and Markets Bill, which is going through Parliament at this point. So from what we understand is, they don't want to stop there. They're still looking for thoughts and ideas of where we continue to contribute to growth in the UK economy.
I was in Davos where Labour actually did also a huge push to try and woo business, to try to seem more market friendly. Are you having those conversations with the opposition party as well?
I think that the opposition has clearly been sort of doing the rounds and really reaching out to business. So I think they're very much in listening mode at the moment, which I find very encouraging. So, certainly I think over the next 18 months, I would expect that to continue.
What would you need from either government, really, to make your life, your business a bit better and a bit easier?
So for us, it's really about stability. And I think we've started to see that stability come to the market over the last 3 months. So I think that's really the most important thing. Whenever we're looking to invest, we're looking to invest in an environment that is consistent. We're making long-term decisions, and therefore having a government that one can rely on to make those decisions is clearly very helpful.
What's the most misunderstood thing about the UK? I mean, we had a number of conversations about regulation, about also bankers needing to move either to Europe or to New York. Do you think the City of London status will ever change significantly?
So I think the City of London has had a great history of reinventing itself again and again. So I think that will happen here. And clearly when it comes to organisations like the London Stock Exchange, they're also again reaching out to industry around what does it take to have listings here in the UK. But we are a global financial centre and we compete on a global basis. So we always need to look to London, to New York, to Frankfurt, to Asia, and particularly some of these emerging centres. We're moving into a multipolar world.
Are you seeing less bankers wanting to live here in London? Is it difficult to find the right people?
Not at all, no. I mean, that's one of the joys, I think, in being in London. It's still the pool of talent here is very deep and is considerable. So whilst we have large operations in Frankfurt and in other global centres, I think London will always be key.
We're kind of going around the world to try and understand, really. I mean, you seem quite optimistic, cautious, but optimistic about the future. When chief executives want to list in London or do a big investment in London, what's the one question that keeps on coming over and over? Is it political instability or is it something else?
No, I think the stability is something which is being delivered now, literally month by month, and I think that's something which now has been put to one side. I think, as always, it's around valuations. What is, particularly with regard to growth stocks, what does the FTSE 100 look like? Is it future-proofed for the next 5 or 10 years? But I think the London Stock Exchange is very focused on that as an initiative, and I'm very supportive of it.
Do you think valuations are quite good because of the shock we've seen, certainly to sterling in the last 6 months?
Well, certainly we've seen a devaluation of sterling, which has played through into valuations. But I think as well, we do need to take a look at really the sectors as a whole, where there's growth and where it's a little bit more challenged. But otherwise, I think that the UK stock market has actually performed very well over the last 3 to 6 months versus other indices.
What's the UK landscape looking like in terms of rivals or competitors? I don't know whether the fintech scene is still one of the hottest ones in the UK that you're looking at.
I think fintech is with us to stay. So for us, it's really about where we can seek to collaborate. So in other words, enhance our own processes, enhance our own IT systems by working with fintech companies in order to help Deutsche Bank be an organization for the future. So for me, fintechs are not a threat, it's more an opportunity.
And this is, as we, I guess, mobile differently. Is the UK still an example of what you can do in the UK and then roll out in Europe, because we are on our mobile phones actually a lot more. We're used to transacting on mobile phones more than maybe other parts of Europe.
I think that's right, and quite often we have pilot schemes here in the UK that then we're able to roll out elsewhere, so long may that continue.
Tina, thank you so much for joining us today. That was Tina Lee, Chief Executive Officer for the UK and Ireland at Deutsche Bank. Now, we'll of course be covering all things UK every week on Thursdays at 9:30 a.m. in our half-an-hour special. Coming up, Alliance Reboot, Renault and Nissan agree on a landmark deal aimed at easing tensions between the two companies. We'll have more on that story next, and this is Bloomberg.
Coming out of World War II into the 1950s, you mentioned that the Fed had imposed yield curve control, basically to finance the wartime deficit. They were trying to move off of that. These are all sort of familiar themes to anyone in 2022, but why was that difficult for them?
Well, so let's get a sense of scale, right? So in 1941, there's about $40 billion worth of treasuries outstanding. In 1945, there's about $240 billion worth of treasuries outstanding. So that's about double the pre-war GDP. If you scale that to 2019 and say, okay, COVID expenditures on the scale of World War II, that's about $40 trillion. And the question is, who's going to buy it? Yeah. And
so what we're dealing with is kind of nothing. We got it.
In that context. And so that's where I guess the analogy breaks down. But it's a very difficult problem, which is who's going to buy the equivalent of $40 trillion today in debt?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The yen fell on a report. BOJ Deputy Governor Masayoshi Amamiya has been approached to become the central bank's next chief. The Nikkei says the government and the ruling coalition held discussions with Amamiya on succeeding Governor Haruhiko Kuroda, whose term does end in April. But the government has refuted that report. Dell has become the latest tech company to announce massive job cuts. It will eliminate a little more than 6,600 jobs, about 5% of its global workforce. Dell is facing plummeting demand for personal computers. Now, Beijing has shifted from expressing regret to threatening retaliation after the US shot a high-tech Chinese balloon out of the sky. China said the device was a civilian climate research vehicle that unexpectedly drifted over US territory. Beijing has denounced what it calls Washington's clear overreaction in using force. Secretary of State Antony Blinken has postponed a scheduled trip to Beijing, calling the balloon an airspace violation. And Beyoncé is now the most decorated Grammy winner in the awards show history with 32 wins. It's after the singer won 4 awards, including for Best R&B Song. Now, that's thanks to her album Renaissance. But she missed out on the very top prize, losing out to Harry Styles, who walked away with the Album of the Year honor. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. I mean, once you're the queen, Queen Bee forever.
And you know what, Francine? I was having a look at some trivia history. Do you know what song and single she won another Grammy Award for on her own, not with Destiny's Child?
I mean, I could sing it, but no, I'd be too embarrassed to. Which one?
I think we should sing it together. All the single ladies, all the single ladies.
Oh, we're always still a favorite. I will spare all of our viewers and maybe not sing, but we could maybe have a little dance off camera. Leanne, always bringing it. Thank you so much. Now, Renault directors have agreed to a landmark deal to rebalance the car maker's 2-decade alliance with Nissan. The deal aimed at easing long-standing tensions between the two companies. Joining us now is Bloomberg's car czar, Craig Trudell. Craig, I kind of want to know what music they got on stage with, because this is a trick, right, that they do. I don't know if it's Beyonce or something else, but what's the latest on the structure, apart from their song choices?
Yeah, in terms of incremental developments today, I would say maybe the one that stands out for me is Mitsubishi Motors, which is the sort of third leg of the alliance, was added, sort of in the last couple of years of Carlos Ghosn leading this group, is going to at least take a look at investing in Ampere, which is the electric vehicle and software unit that Renault is going to sort of cleave off here. Beyond that, I mean, a lot of what was discussed today is really sort of confirmation of what's been known, some kind of fleshing out of what sort of projects they're going to work on. But these are companies that still are not necessarily, fully, addressing or putting to bed concerns about, the sort of long-term health of this alliance. They're saying they're going back to the beginning and back to basics in terms of working together, but the proof is going to be in the pudding in the years to come.
I mean, Craig, does this alliance still make sense? And is this, I mean, if this doesn't put them in a better footing, but I guess, resets the relationship, why do they still have it?
Yeah, I think there's definitely still some validity to having, joint platforms, joint purchasing agreements, some, validity to, pursuing that in the pursuit of bringing costs down and sharing, development, sharing production assets. But I do think, when you take a step back and take a look at what they're doing going forward, and this is perhaps, setting the stage for it being easier for these two to, if not break up, at least, go and work with other companies and have, the flexibility to pursue joint projects with other car makers rather than, solely focus on, what the two or, 2.5 could do.
The most difficult question you'll have to answer all year is what will make the success of a car company in the next 5 years? Is it the right software? Is it being an EV? Like, how do these two groups make it work?
Yeah, and I think Renault is really sort of going in the direction of trying to take this on with partners in the tech sector, notably with Google and with Qualcomm. And so, I think there are some questions that Nissan, perhaps, the onus is on them to answer going forward. What is their plan to sort of, come to market with what Tesla has done, not just electric vehicles, but connected electric vehicles that can be updated over the air. I think one of the things that's sort of underappreciated about what Tesla has done to sort of disrupt the industry are some of these things, that are sort of more tech-like. And a lot of the incumbent car makers have talked a big game about replicating that and not been able to really execute that.
Craig, thanks so much, as always, for the terrific roundup. Our Bloomberg car czar, Craig Trudeau. Now, Bloomberg's Tom McKenzie will also be speaking to the chief executives of both Renault and Nissan in a joint interview. That's at 10:15 a.m. London time. Stay with us for that. Also coming up, we get the latest on the powerful earthquake that has killed hundreds on the Turkey-Syria border. This is Bloomberg.
We have only 8% of the ocean protected today. And our Earthshot is, as Patty said, 30 by 30. 30% of the ocean, at least, 30% of the ocean protected by 2030. And we know that if we protect the right 30%, not only we will prevent the extinction of many marine species, but also we will produce more fish. There's going to be, these protected areas are going to produce a spillover that will exceed the foregone catch. So we're going to have more fish to eat, food security, livelihoods for people. And we know that for every dollar that we invest in a protected area, in a marine reserve, that produces $10 in economic output and creates more jobs. So it's a triple win for marine life, for food security, and for climate, and of course, for the economy. So that's the goal, the mission.
The top names in business are on Bloomberg.
More and more people are frightened of the realities of today, and that's manifesting in so many areas. Why would anybody put something into a 30-year obligation unless you believe something is better in 30 years? I'm not here to suggest it's going to be rosy in 2023, but what I'm saying for long-term investing, it's a better environment for long-term investing today than it was 2 years ago.
Nobody covers business like Bloomberg, your global business authority.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, hundreds of people have been killed in an earthquake that hit along the border between Turkey and Syria. You're looking at live pictures from the Turkish city of Diyarbakir, where rescue efforts are underway. Onur Ant, Bloomberg's Turkey bureau chief, joins us now. So, Onur, what are the latest updates on some of these rescue efforts?
Well, it's a race against the time for rescue operations underway currently in Turkish cities along the border with Syria, where a powerful earthquake struck at 4 a.m. this morning. The temperatures are close to freezing, and we expect the rain to turn into snow in some of the affected areas over the next few days. More than 1,700 buildings collapsed on the Turkish side of the border, according to Turkish authorities, trapping hundreds, if not thousands of people. And death toll right now stands just below 300, but very likely we're going to see some dramatic revisions in that figure in the coming hours.
So, Onur, why have oil flows to a Mediterranean port been halted?
That Mediterranean port, Ceyhan, is very close to the area affected by the earthquake, and although authorities say there were no leaks or other damages detected on the pipelines carrying crude oil from Azerbaijan and Iraq to the Ceyhan oil terminal, they have still halted flows as a precaution. It's not clear when they're going to resume, but according to Turkish authorities, there's no damage to the pipelines.
So how prone, Onur, is the area to earthquakes?
Turkey as a whole is one of the most active seismic zones. So a major earthquake takes place every few years, if not more often. This area in particular, also we've seen major earthquakes in eastern Turkey and southern Turkey in the last few years. Over the last decade, there was another major one in Van, which is not that far away from the area affected in this case. So yeah, Turkey does sit in a very active seismic zone. But to be clear, these, according to some of the geologists that we spoke with, this is definitely the most powerful earthquake that took place since 1999 in Turkey, and possibly the biggest, the most powerful one since 1939. Yeah, possibly the biggest earthquake that shook Turkey in close to a century.
Yeah, and Onur, of course, some of these headlines are just heartbreaking. Thousands, we understand, are still injured and trapped as a lot of the buildings are, if not collapsed, on the brink of collapse. We have 284 deaths in Turkey, 237 in Syria, with, of course, destruction concentrated in border areas that house millions of refugees. What international effort can we expect and look at? Which country has offered to step in?
U.S., Israel, Iran, Azerbaijan and India, as well as the European Union, have all offered to help, and I think Turkey is open to receiving those assistance offers, because the Interior Minister earlier today, he said that Turkey has activated level 4 alert, which basically means that Turkey is open to and does want to have international assistance, because the situation in the southeast, judging by the footage and the reports, seems to be quite dire.
Onur, thank you so much. Onur Ant there, of course, with the very latest on the ground. One of the most powerful earthquakes to hit the Middle East in years has killed hundreds of people in Syria and Turkey and forcing a halt to crude oil flows to a key export terminal. So we'll continue watching this developing story very closely. Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller and Katie Lyons in New York, Anna Edwards here in London, and this is Bloomberg.
The standard way venture firms work is you commit capital, let's say over a 5-year investment period, something like that.
Yeah, exactly. Right.
And then the fund is typically lasts maybe 10 years or so.
15. Well, these days longer. So often 15. Often the tail extends out to 20 years because these companies take a long time to develop.
And somebody that invests in a venture fund today should be trying to get rates of return of 20%, would you say, or more?
You know, top-end venture is sort of 3x net of fees. You know, ideally you're hoping for more than that. You're hoping for 5x or more. You know, you're illiquid the entire time, right? So you'd hope to get paid for the liquidity.
And today,
so yeah, maybe 20 to 40% if things go well is sort of baseline.
Let's take another subject. Let's suppose somebody says, I don't want to invest in Andreessen Horowitz. I want to be Mark Andreessen. How does somebody become a venture capitalist? What are the skill sets for good venture capitalists? There's a high degree of intelligence, hard work, a lot of luck, dress the right part, don't wear a tie? What are the things that make one a good venture capitalist?
So the highly successful VCs historically are very idiosyncratic. You have people from very different backgrounds. Mike Morris is a former newspaper reporter. John Doerr is a former chip salesman. You've got people with very different. Jim Breyer has more of this kind of blue chip investment background. You have people with very different backgrounds and experiences. And so I think it's some set of skills and some set of knowledge, and then there seems to be a taste component to it that's really hard to measure and really hard to predict.
Any country that has its airspace violated in this way, I think, would respond similarly. And I can only imagine what the reaction would be in China if they were on the other end.
This is an unexpected incident caused by the force majeure. Despite China's explanation, U.S. use of force is overreaction.
This balloon incident was a gross violation of U.S. sovereignty. The Biden administration really just wants to prevent the relationship from deteriorating into outright confrontation or even conflict.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong. Our top stories today. Divers try to recover what could be spy equipment from the Chinese balloon that was shot down. Lawmakers demand to know if any of the technology came from the United States. The yen falls after a report on a possible replacement for the head of the Bank of Japan. Deputy Governor Masayoshi Amamiya has played a key role in the central bank's large-scale stimulus program. Renault and Nissan have reached a landmark agreement on reshaping their alliance. We will talk to the CEOs of both automakers later this hour. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. And Kaylee, clearly after the jobs report on Friday, markets were very risk-off in their response to that, concern around higher interest rates, and now continuing to be risk-off, but with added geopolitical dimensions.
Yeah, that's absolutely right, Anna. And you definitely saw both things reflected in the Asian session overnight, where most stock benchmarks were indeed lower. The MSCI Asia Pacific Index falling by more than 1%, actually 1.6%. And those really were losses led by China and Hong Kong stocks in the wake of the U.S. shooting down that reported spy balloon over the weekend. The Hang Seng China Enterprises Index in Hong Kong down by about 2.7%. So geopolitical tensions coming to the forefront after, frankly, investors had been betting on more smoothed out relations between the world's two largest economies. Another story watching in Asia overnight, and Anna mentioned this, potentially Masayoshi Amamiya coming in to replace Kuroda when his term is over in April at the Bank of Japan. Now, the Japanese government has pushed back against those reports that happened over the weekend, but that is not stopping market participants from betting perhaps or reacting to the idea that that could mean continued easy policy in Japan. So we're seeing that reflected in a weaker Japanese yen today, dollar yen trading just shy of 132, 131.97 at the moment. Then, of course, the other story we continue to watch in Asia is the saga and collapse of the share prices in the different Adani conglomerate groups. Of course, you had the flagship Adani Enterprises now pulling back a bond sale over the weekend. Now, Adani and some of his family members are prepaying $1.1 billion against some borrowing. It doesn't really seem to be helping any of the share prices, though. The Enterprises flagship only down about 0.9% on the day, but you're seeing much deeper losses across some of the other stocks in the conglomerate. Matt, it's safe to say this saga is far from over.
Yes, there's a lot going on with the Japanese central bank, with the Adani story that continues. The balloon, can't forget the balloon, obviously. obviously. And then the jobs number on Friday, really roiling markets because it was so much more than had been expected. And Jerome Powell was trying to tighten financial conditions, which seem really loose now. Take a look at S&P futures, down about 0.9%, even after we dropped 1% in the cash trade on Friday. So it looks like we're going to see further declines in risk assets this morning. You see the U.S. 10-year yield continuing to climb right now at about 359. Remember, we shot up 13 basis points to 352 and change on Friday. So that climb continues as investors sell off this debt. Why hold debt today if you think the central bank's going to raise rates tomorrow and you can get a better return? The dollar index continues to climb as well. Right now, the Bloomberg dollar index at 1238. And what's interesting is that drives down assets priced in dollars. So you see gold, for example, it was up over 1950, and now it's down with an 18 handle. Oil is the same. We saw WTI climbing up at one point early last week above $80, and now we see a 73 handle there, 73.32. Anna, what do you see in Europe?
Yeah, well, here in Europe, Matt, we see red across the board, essentially. So negativity across European equity markets. And what's interesting is, despite that strength in the jobs report on Friday and the selling pressure we then saw on risk assets during Friday's session in the U.S., European markets actually managed to close in bull market territory. So going back into a bull market on the stock 600, some of the individual markets were already in that territory. But that was the overriding theme of Friday for European stocks. So maybe some of that strength was overdone. And so we're looking a little bit more vulnerable this morning and giving up some of those gains in the face of the geopolitics and more thinking perhaps around the Fed. I also wanted to bring you what's happening in Turkey. Clearly, the humanitarian story is front and foremost. We will get a further update on what is happening on the ground with the rescue efforts later on in the program. But I just wanted to show you how this is playing out from a market perspective. That earthquake hitting Turkey, and we see evidence that there's more selling of Turkish stocks. As a result, we see the CDS going higher, yields going higher. The cost of insuring against default on Turkish debt has gone higher as a result. 8 stocks suspended and a ban on short selling as the market tries to ascertain exactly what has happened to the operations of certain businesses. This is another market in focus. The FTSE 100 down by 0.9%. And I mentioned the bull market story, Matt, from Friday. Well, this was interesting. The FTSE closing at a record high during Friday's session. So it's kind of striking a bit of a different tone. Doesn't quite chime with what we were seeing stateside. And so European stocks coming down today as a result. 107.66. Just thought worth checking in on euro dollar. We've been up to 110 last week in anticipation of some of that data coming out of the United States and all that hawkish talk from the ECB. Well, some of that vulnerable now. We've seen the dollar, of course, gaining as a result of the non-farm payrolls report, and the euro continues to fall, down 0.3%. Here's the UK 2-year yield. A reminder, perhaps, of the tightening still required in the UK economy. Then we heard from Catherine Mann at the Bank of England talking about that theme a little bit earlier on, and that has been lifting yields at the certainly at the front end.
All right, so the FTSE coming off a record high close on Friday. Meanwhile, back in the U.S., lawmakers are demanding to know if that Chinese balloon was carrying technology from America or its allies. Divers are trying to salvage what the government believes is spy equipment from the balloon, which was shot down off the coast of South Carolina after President Biden's order.
On Wednesday, when I was briefed on the balloon, I ordered the Pentagon to shoot it down on Wednesday as soon as possible. They decided, without doing damage to anyone on the ground, they decided that the best time to do that was as it got over water outside within the 12-mile limit. They successfully took it down.
For more, we're joined by Bill Ferries, Bloomberg's senior editor for Asia and former U.S. national security team leader in Washington, D.C. So, Bill, what are the implications of this balloon incident on Blinken's trip to China? Are we going to see the possible détente derailed by a balloon?
It's certainly possible, Matt. We don't know yet when Secretary Blinken plans to reschedule his visit to Beijing, but everything we've seen over the last few days, this incident is likely to have him arrive in Beijing with a little bit of a harsher tone. There were never huge expectations for major breakthroughs in this meeting, but it had been hoped by both sides that Secretary Blinken being in Beijing would be a restart of more mid-level and lower-level talks that could really help deal with some of the big problems in U.S.-China relations.
And one of the next things we're looking for then, as this crisis continues, the market increasingly focused, it seems, on the geopolitical risks attached to this.
Well, it's going to be very interesting to see what these Navy divers off South Carolina are able to bring up and what the U.S. is able to determine from the debris that it collects. There's going to be a lot of questions about which Chinese companies may have manufactured this equipment and whether they're already under sanctions or could possibly be under new sanctions. There's going to be a lot of interest, as you mentioned, in whether U.S. or allied technology was involved in this equipment and whether there's a way to tighten the screws on that. And separately from the Chinese side, they've said that they want to, they will look for ways to retaliate, so that could make tensions a little bit higher in places like the South China Sea and the Indo-Pacific broadly, where the U.S. continues to operate.
All right, Bloomberg's Bill Ferry is reporting from Singapore. Thank you so much. A story we will continue to follow and have more on later on this hour. Meanwhile, elsewhere in Asia, the yen is falling on a report that BOJ Deputy Governor Masayoshi Amamiya has been approached to become the central bank's next chief. Joining us now for the details is Christine Aquino, Bloomberg Managing Editor for Markets. So, Christine, Amamiya is seen as a continuity candidate for the BOJ governor. So why don't yen traders seem to like the idea very much?
Yeah, good question, Kaylee. I mean, typically markets do like the idea of continuity, especially at the central bank. But for the Bank of Japan in particular, we have seen Governor Kuroda's legacy as being very, very conservative when it comes to pulling away from that super low rate, very easy monetary policy era and back to something that's more normal. And that's really what markets have challenged the BOJ to do over the last 6 months or so, is to kind of join that policy normalization train. Now, with Amamiya potentially being tapped for the next governor role, that's probably going to continue that more conservative approach, and markets really don't like to see that at this stage.
Right, indeed. And good morning to you, Christine. What would be considered a game changer then for markets when it comes to the next BOJ governor? I guess if this is a continuity candidate, then somebody who is not that.
Exactly, Anna. I think somebody who comes in and really rips up the playbook of the BOJ so far and kind of radicalizes the way that they approach policy, certainly somebody who would be considerably more hawkish than Governor Kuroda and potentially Deputy Governor Amamiya. We do have a few of those on the Bank of Japan Policy Committee. So there have been a few individuals identified as part of the committee who would be considerably more hawkish, considerably more eager to start and speed up that policy normalization process.
All right, Bloomberg's Christine Aquino, thank you so much. Now turning to Carlyle, it has a new CEO. Bloomberg has learned the private equity giant has chosen former Goldman Sachs co-president Harvey Schwartz. The announcement formally could come as soon as today. For more, we're joined by Sonali Basak, Bloomberg Global Finance Correspondent. So Sonali, we've been waiting for a choice for a while. Is Schwartz a surprising one?
Listen, this is a dramatic end to a really stunning 6-month search on Wall Street. Remember, we know Harvey Schwartz left Goldman Sachs. He was a CEO contender back in 2018. And so now, yes, I mean, it's pretty rare, guys, to see a banking executive take over a top spot at one of the largest private asset firms in the world. That transition is challenging to make. Remember, he himself, again, was the president of Goldman Sachs, so he has a very material leadership experience here at a time that is very challenging for Carlyle ahead. Carlyle's own directors have said that the firm could benefit, according to sources. The firm could benefit from an outsider with a fresh perspective. But again, this is another shot at the game here for Carlyle, which already tried to transition past the founders, which still hold 25% of the firm's stock.
So succession has been an issue for a lot of these old, storied private equity firms. What are the other challenges that Carlyle faces?
Listen, their stock has really lagged their rivals. So between asset growth and between kind of bringing around the firm's performance here in public markets, changing the perception of Carlyle after such a dramatic debacle we saw at the top will be an interesting thing for Harvey Schwartz to be doing. Remember also the fundraising environment at large has been very challenging, and Carlyle itself has been lagging where it wanted to be in certain fundraising metrics. What I had understood also is as they go out fundraising, there's the core private equity groups where the cost of financing is higher now than it was in the last decade or so, and they've been pivoting more towards credit as well. So can they improve morale while also kind of sharing the love among all the businesses in a tough fundraising cycle?
All right, Sonali Basak, Fantastic. Joining us early on a Monday morning here in New York. Thank you so much. Now, another story we are watching this morning is Dell. The company announcing plans to cut about 6,650 jobs, or roughly 5% of its global workforce, as it faces plummeting demand for personal computers. It, of course, joins a long list of technology companies announcing they will be letting go of thousands of employees amid a soft economic environment. As for how the stock is reacting in pre-market trading this morning, it is not too large a move, but it also is not a positive one, which is kind of a break from what we have been seeing, the pattern we have been seeing when companies announce mass layoffs. Usually there is a positive stock reaction, not so for Dell this morning. That stock down about 0.8% before the bell. One stock on the rise, though, is Tesla. And get this, it's about a price hike. Of course, the news we have been following with Tesla for some time now has been that they are reducing prices of their models in order to spur demand, but over the weekend they raised the price of their Model Y SUV by as much as $1,500 depending on what package you get. Tesla's up about 1.1%. This might be tied to the Biden administration expanding the eligibility for those EV tax credits for cars up to $80,000, but that is stock to watch today. And finally, it is a Monday and potentially some M&A Monday, or at least proposed M&A. Newmont Mining, of course, the gold giant here in the U.S., making a $17 billion bid for the Australian company Newcrest Mining. We'll see if that deal ultimately goes through. If it does, it could be the biggest deal of the year thus far, but investors in Newmont not reacting kindly to that news. Maybe they don't like that price tag, Anna. That stock down about 5% before the bell.
Yeah, the attractions of gold and copper, what are they worth? Kaylee with the pre-market movers. Coming up on this program, we will speak with the CEOs of Renault and Nissan about the reshaping of their alliance. The two businesses agreeing on a landmark deal just this morning to reshape that alliance. That conversation coming up next. This is Bloomberg.
Thing in life I've often said is to be happy, but you seem like a very happy person.
It's like nature. Nothing ever stops. So you could be super happy 1 minute and then something happens. So it's just living. It's the joy of life.
For any young woman that's watching this, wants to be the next Diane von Furstenberg, what would you recommend?
I think the most important thing in life is the relationship you have with yourself. Once you have a good relationship with yourself, any other relationship is a plus and not a must. And the second advice is to be as true to yourself as you possibly can. And you have to accept and own things you may not like, but the more you could be you, the happier you will be.
The top names in business are on Bloomberg.
Different countries are at very different places, so you actually cannot speak in generalities. We expect to see a rolling series of country recessions, but the vulnerabilities that amplified previous recessions around the world are not present. That omens well for a mild recessions when they come.
Nobody covers business like Bloomberg, your global business authority.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kaylee Lyons in New York and Anna Edwards in London. Now, Nissan and Renault have agreed on a landmark deal to reshape their alliance. Renault will cut its holdings in Nissan from 43% to 15%. Meanwhile, Nissan will invest in Renault's electric vehicle business. Joining us now with the CEOs of both Renault and Nissan is Bloomberg's Tom McKenzie in London. Tom?
Matt, thank you very much indeed. Yeah, a major day, of course, for both of these corporations, all three companies within this alliance. Very pleased to say that I am joined by Luca De Meo, who's the CEO of Renault, and of course Makoto Uchida-san, who is the CEO of Nissan after this announcement, historic as the way that it's been described at the press conference. Luca De Meo, let me start with you. You've talked about, we heard in the press conference there, executives from both Nissan and Renault saying, look, this is a new start for the alliance. It's going to inject new momentum. The question, of course, for many will be, the ties have been weakened as a result of the capital changes, the shareholding changes. Is that a contradiction? Explain for us how this reboots the alliance and how you look through that contradiction, at least as it seems to some.
Look, I think that we took the problem from the other side, right? So a lot of discussion has been going on in the last years about the governance, but in fact, we took the problem with Uchida-san from the basic operation and the potential of business that lies in the cooperation, so from the bottom. And so I think that this new deal is based on business opportunities. That's one thing, and simple, clear rule. As a consequence of the whole thing, not as an objective of the whole discussion, was the idea of going back to a normal governance scheme between two companies having cross-shareholding participation, because we had I would say, a very baroque way of, handling the governance issue with a company like Nissan having 15% of Renault without having any right, and we, on the other side, having 43.4% of Nissan having no right. So right now it's 15-15. I mean, it's going to be like this in the next, we're going to prepare that, and that's the destination, but we will be eye on eye, and it will be just a simple, normal governance scheme. So I think it will help also the operation and the conversation.
Okay, Mr. Uchida, I'll bring you in at this point. The marriage analogy has been made around this alliance. It was made again today. Some analysts, some investors saying, look, this could be a renewal of vows between the two companies, or it could be the first step towards a divorce. What is your response to that?
No, as Luca mentioned, let me add some of the comment, because if you look at our business circumstances today, right, world market is in a fragmentation, and we need to make our value proposition to be demonstrated in each market. So how we can make our alliance to be a next stage was the first discussion I had with Luca back in May, if I'm not mistaken, and we have been sharing how we can make our value of each company to be present. And of course, Luca has his own Renaulution as a Renault strategy, and therefore he's going for the Ampere. And we, as a Nissan, also have our own strategy. And how we can maximize all those together was the initial discussion. So what I would like to say is we should not be staying at the past way for our future growth. And that's not where the automotive industry is working right now. So this has matched. And I think these circumstances made us to move on that way, and how we can make more collaboration to be much better. So it's going to be more stronger is my message that I can give.
Okay, and look, to those who say, look, Renault and the French state, frankly, have given away too much in this deal. How do you reply to that?
Oh, I think that we got the support of also the French state, which is one of our major shareholders, because they understood that we had to move on. And so in fact, the previous governance that was decided, in a way, had an impact on the operation. So I'm the CEO, so I look at the business. I look at the business opportunity. So we have been fighting to propose something where everybody could see, any stakeholder could see, that the future would be better than the last 3 or 4 years or 5 years, based on the project that we have agreed to get. Now, of course, we have to execute them one after the other. But they are not rocket science. Sometimes they are, it's a deal on the market, it's a deal on a technology, on a platform. But what we have announced today, in terms of business project and opportunity, is much bigger than what we have ever done, at least in the last 10 years, from a pure business value creation point of view. And that's the most important thing. I mean, then they can say whatever they want, but we are here to develop the business and create value for our shareholders and stakeholders.
And an important part of the shareholder structure change is, of course, putting that 28%, Renault's 28% stake, part of that stake, 28% into a trust. Mr. Uchida, do you buy those shares back? What prism, what are you looking at in terms of your determination, in terms of when you buy those shares back, over what time frame?
Again, I really would like to emphasize again, we're going to make an equal partnership in order for us to grow together. That comes the first priority. Then, of course, our partner has their economical rights through this trustee. And of course, my job is how I can make my Nissan share price at the right level in order for my partner to be satisfied, right? So the entire thing has been discussed on that manner.
Okay, and in terms, let me follow up in terms of your investment in Ampere, which is the electric vehicle unit of Renault, which we've heard you may want to list later this year, and maybe I'll get to a question on that. How much do you want to be investing in Ampere? Up to 15%. Where does that take you? What do you need to be looking at to make that determination as to how much you invest in Renault's EV unit?
Yeah, first I really would like to see how the Luca is going to make this Ampere to be more attractive for me, all right? So.
I will.
Yeah, you will, he will. And we say that I'm going to be a strategic partner, as we are today with the partner. So when he wants to do the new business in, let's say in Europe, we can get a lot of opportunities through his new era of Renault transforming more further on this Ampere business, that there's a lot of opportunity that we can build. So we are saying that up to 15% as an initial we're talking about here. And of course, he will demonstrate me a lot to make it more attractive.
Okay, there have been concerns, non-executive directors at Nissan concerned about intellectual property and whether some of that leaks to Geely, which is going to be a partner for Renault going forward. How did you address those concerns around intellectual property?
Well, intellectual property for the both company, is very valuable for us, okay? Then we do have a lot of co-owned intellectual property that we have been making together for the past 23 years. And of course, there's a different transformation of the company structure that he is doing for his powertrain. Then we have to go through every single items to make it fair for the both company. As simple as that for me.
Luca De Meo, let's bring you in at this point in terms of execution, because it's what, a year since I think you announced how you're going to be restructuring the Renault business. And then, of course, we've got to a point now we've signed off on this deal around the alliance. There'll be those who look back at the past and say it took too long to execute. And maybe you'll agree with that. Does this allow you to execute more quickly? Are the lags, the delays, the indecision of the past, has that been put to bed now?
I think I'm Renault since July 2020. I think we executed one of the most, let's say, brutal and effective restructuring project in the automotive industry in the last couple of decades. You just look at the numbers. And we are parallelly developed probably the most attractive lineup of products that will come from now to 2025 for all the brands. We have presented a strategy for, up to 2030 with the Revolution and Revolution phase. So all the things that we're discussing, Ampere, Horse, Alpine, Futures, Neutral, etc. So I don't think we've been sleeping at all or been slow into the. Actually, I think there is a very, very strong dynamic at Renault. We started with Uchida-san in May to discuss about how to revamp the alliance. For me, my mainstream or my focus is obviously let's say, the strategy, execution of the strategy of Renault, and I look at the alliance as an opportunity. Now I can clearly see it because we have very, very concrete projects, and I don't think we have been, let's say, so slow because this thing has been locked for 4 or 5 years, and in a matter of 6-8 months, we actually find the key, I think, and the solution.
Okay, very briefly, before we let you go, Mr. Uchida, do you see demand, how much more demand do you see coming back as those supply chain constraints ease?
Supply constraint is?
Yeah, and how much demand is coming back as a result of that?
Well, I would say that, of course, we really need to carefully to monitor on this coming fiscal year of 2023, because I always say that world now has become very difficult and challenging. Who ever thought about it if you're 1 year ago, right? What has been happening only this 1 year? So we need to be anticipated, we need to be prepared, and hope how we can make our value of the company to be in the base.
We're running up against a hard break, so I have to leave it here. The CEOs of Renault and Nissan, thank you both very much. Stay with us for more. This is Bloomberg.
Amazon that are capturing most of your time and attention?
Well, we have a unique way that we look at big new investments. And I'm not sure it's right or wrong. It just happens to be our way. And we ask ourselves when we're considering something 4 questions. We ask, if it's successful, can it be big and move the needle at Amazon? Is it being well served today? Do we have a differentiated approach? And do we have competence there? And if not, can we acquire quickly? If we like the answer to those questions, we'll go pursue it with a single-threaded team that isn't distracted by the rest of the business.
When it comes to the stock, it has fallen significantly. Do you think investors are missing something, or has tech just been overvalued?
I have never tried to predict what the stock's going to do. And any time I've tried to a little bit, I've been wrong. I do really believe that in the short term, the stock market tends to be a voting machine. In the long term, it tends to be a weighing machine. We have a concept we talk about a lot at Amazon, inputs and outputs, and the ultimate output for a company is share price, and then other big outputs are free cash flow or profit or revenue. You can't really manage the outputs. You have to manage at the input level, and that's where we spend all our time. And so if you do the right things for the business long term, things tend to work out. I think we've had very good returns for investors, and I expect that to be true again.
When innovation strikes, Bloomberg Technology is there with the news and analysis you need. Every weekday, only on Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. That's a question I get all night.
Bloomberg, top experts, great questions.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Divers trying to recover what could be spy equipment from the Chinese balloon that was shot down. Lawmakers demand to know if any of the technology came from the United States. The yen falls after a report on a possible replacement for the head of the Bank of Japan. Deputy Governor Masayoshi Amamiya has played a key role in the central bank's large-scale stimulus program. And Carlyle Group moves to resolve its long-running succession challenge. Bloomberg's learned the private equity giant has chosen former Goldman Sachs executive Harvey Schwartz to be its CEO. Welcome back to the program. I'm Anna Edwards in London with Matt Miller and Kaylee Lyons in New York. And Matt, we continue to watch NASDAQ futures weakening, US futures more broadly weakening. There's the aftermath of Friday's jobs report. There's geopolitical tension. There's also rising short-end rates on treasuries and here in the UK.
Yeah, it does seem to be, well, really about Friday's jobs reports and continued concerns that the Fed is not done hiking. As a result, we saw the cash trade drop 1% on Friday, and now we're looking at futures that are down about 0.9%. You can also see that yields are rising. So the 10-year yield, which had already risen 13 basis points on Friday to 352, is now up to about 361, gaining another 8 basis points today. So that's a very interesting factor. And combined with the strength in the U.S. dollar, that causes more risk-off movement in markets. Right now, 1238 is level on the Bloomberg Dollar Index. But as the dollar rises, the price of assets priced in dollars falls. So, for example, gold was up over 1950. Now it's down at about 1850. And NYMEX crude was up above $80 at one point last week. Now West Texas Intermediate is down to 73.71. I should say it's up from the close of the last session, but I'm just pointing out that as the dollar rises, a lot of these assets, including Bitcoin, are lowered in price. Bitcoin now down under $23,000. Kaylee, what are you looking at in terms of pre-market movers?
Well, potential merger Monday action, or at least proposed merger Monday action in the gold space. Newmont Mining making a $17 billion bid for the Australian company Newcrest. Investors, though, not reacting too kindly to that offer. That stock, Newmont stock, down nearly 6% before the bell. I want to point out Tesla, too, because we actually, after a series of price cuts, have seen a price hike over the weekend for its Model Y SUV that may or may not have something to do with the Biden administration tweaking the eligibility for EV tax credits. But nonetheless, Tesla is up about 0.8% before the bell, but that's a relative outlier within the big tech space. Anna, you mentioned, and Matt, talking about the deterioration we were seeing in NASDAQ futures that really is led by the mega caps. Apple giving back its gains of last week to some extent, that stock down about 1.2%, and then Amazon extending losses after an 8% decline on Friday after its poorly received results, down another 1.3% before the bell on this Monday morning, Anna.
Yeah, it was interesting how on Friday we saw US markets pass those tech stocks quite differently, actually, resulting in different share price performance. This is the share price performance we see here in Europe today. So coming off a bull market, being in bull market territory on the Stock 600 on Friday, looking a little bit vulnerable then with that jobs report and the geopolitical tensions that hang over the market, and stocks in Europe down by just over 1%. Away from the broad picture, away from the macro and the geopolitics, we also had that earthquake in Turkey. Our focus clearly on the humanitarian side of things there, the death toll and the rescue efforts underway. We'll get an update on that shortly, but thinking about the market impact here, we're down by 2.7% on the Turkish equity markets. We've seen certain stocks suspended as investors look to get an assessment of what kind of impact this has had on operations. We've also seen a ban on short selling. We see CDS rising. It's becoming increasingly expensive to hedge, to protect yourself against the risks of default on Turkish debt. So those things are all on our radar, if you like, on that subject. The FTSE 100 down by 0.9%, and actually on the FTSE during Friday's session, Matt, we ended at an all-time high, the first one we've seen since 2018, and so that being seen as quite interesting for those very focused on the UK market, even if a lot of that was driven by weakness in the pound, strength in the dollar post the jobs report. This is the UK two-year yield then. Matt was talking about the front end of the Treasuries curve, or at least, well, he had the 10-year there, and we were also referencing movement at the short end. Here we have the short end of the UK curve, reacting really to global fallout from the global geopolitics, but also reacting to comments from Catherine Mann at the Bank of England, which could be seen fairly hawkishly, and as a result, we're seeing a move of 14 basis points at the UK short end.
Yeah, it does seem to me that central bank talk about rates, especially after the jobs number that we got on Friday, is going to drive the front end, possibly more than the balloon. Joining us now is Seema Shah, Chief Global Strategist at Principal Asset Management. Seema, what's your take on the rise that Anna points out there in front-end yields? Are we expecting central banks to get more hawkish after this jobs number?
Look, I think it's a difficult one at the moment to weigh up. You know, you look at a lot of the economic data, and it has been suggesting that there's a slowdown coming. And then you get, of course, this blowout number from Friday on jobs. And I think it is making a lot of people question and say, you know, maybe the US economy actually is that much more resilient. And then, of course, on the other side, there's what we think the Fed is going to do. I mean, from our perspective, we do think that the Fed has got fairly further to go, so another 50 basis points to go at least. And then we're not anticipating rate cuts for this year because we do think that the US economy is fairly resilient, but so therefore it needs further work from the Fed to keep policy restrictive. And then at that point, of course, we'll see how things pan out.
Seema, good morning to you. So you expect another 50, no cuts then from the Fed this year. We heard from Larry Summers over the weekend. He was talking about how the chances of a soft landing have, in his view, been increasing in the last few months or so. Is that something that looms on your radar? I mean, some sort of environment where we can effectively bring inflation down some, but at the same time not damage unemployment too much, or is that just too Goldilocks to wish for?
Well, it is really interesting because I think Larry Summers has been the leading voice through all of this. You know, he was one of the first ones to call out that inflation was going to move significantly higher and then the Fed would have to move more aggressively. So with him saying that the soft landing maybe is becoming a little bit more realistic, you have to take notice and sit up and listen. So from our perspective, we are expecting recession to hit in the second half of the year. We're expecting to be fairly modest, so 2 or 3 quarters fairly standard for a US recession. But the data is coming in stronger. So, you know, I think what we are likely to see is a US economy which doesn't necessarily feel like it's recession.
Yeah, recessions with unemployment rates at 50-year lows, difficult to picture here in the UK as well, or in the United States, more specifically on that data.
I think particularly on the US, you know, for the UK, we are a lot more bearish in terms of the economic outlook. We do feel actually you will start to feel like there is a bit of pain because we have got a couple of other dynamics which are playing through. But specifically for the US, the soft landing, it is, I think the percentage chance of it happening, it has increased, certainly. But for us, when you look at all of the economic models, especially the yield curve, it's very difficult to dismiss a lot of those factors and say that a soft landing is possible.
Well, and let's talk about what kind of landing is priced in, Seema. Good morning, good to see you. David Kostin over at Goldman Sachs publishing this morning saying that already the S&P 500 accurately reflects signs of better than expected economic growth and a drop in bond yields. Therefore, they don't see upside from here. 4,000 is now their 3-month target and their year-end target, and even that is below where we are now. How much room to run is there for the U.S. equity market?
And I think David's made a really strong point here, which is that in terms of what the market is pricing in, it's very difficult to get any better than that scenario. They have got the Goldilocks scenario priced in. So from here on, especially when you start to think about geopolitical tensions, whether we've seen over the weekend, there is no room for error. So I think from here, we're probably getting closer to the top point, but we need to start to see those earnings disappoint a little bit more. So it might be a couple more weeks or even next earnings season before we see that movement.
Well, Seema, I'm glad you brought up geopolitical tensions because there's a question of that risk as it relates to U.S. stocks, but Chinese equities as well, considering how much it has powered a rally within that domestic market and in broader EM thus far. A lot of optimism about not just reopening, but also potentially the easing of relations between those two countries. If that goes away, if things become more tense, what does that investment thesis change look like?
Yeah, so I think we've had a slightly more cautious perspective when it comes to China. So we do believe that the next 6 months we'll see this fairly meaningful boost to growth and, of course, a lot of investor optimism. But then you get past the next 6 months and you have to start to think, well, look, the regulatory side, the common prosperity goals, none of that is going to go away. We know that the government is not necessarily going to push for a major move up in China's economic growth. And as you said, then there's geopolitical tensions. So if that doesn't ease, then it does mean that it should constrain China's growth going forward. So a lot of the industries that there is a lot of optimism around would be very negatively affected if these tensions continue to escalate. So for us, that is a bit of a tension point. 6 months out, good. Beyond the next 6 months, I think we have to be a little bit more concerned.
Seema, India has been really the hot alternative to China for investors at the end of last year, beginning of this year. Does the Adani case derail that? Does it complicate India as an investment?
Yeah, India, as you said, look, it's been a fantastic outperformer. Now, the thing with India is, the Adani case, it's difficult to figure out whether, if it's going to have longer tentacles or not. But the one thing that we do know is that if you look across the global universe, India and the US are the two most expensive markets. So from that regard, India really can't afford to have any kind of upsets like the Adani case. So we do think that maybe it is going to unsettle investor perspectives for India and maybe settle it down, especially when you consider that outside of India, in large parts of emerging Asia, there are some really, really good opportunities. So this may dim the attractiveness of the India story.
And a lot of those emerging market opportunities might hinge on the dollar, and a lot at stake for the dollar. Last week, we saw that clearly demonstrated, a big rally in the dollar as a result of that outperformance on non-farm payrolls. Where do you think the dollar heads then from here, Seema?
So we have been on the mindset that this year is going to be a weaker for the dollar. But I have to say, as long as the US economy is as strong as it is, and as long as the market is questioning how far the Fed is going to go, you are going to see these intermittent moves where the dollar will strengthen. So you don't get that kind of continued weakening. Now, once you get to the Fed pause, now at that point, then I think you could expect to see a dollar continuing to come down. But so much depends on the geopolitical shock nature. So, we think broadly speaking, you're looking at a weaker dollar, which should help the rest of the world. But for now, it's a little bit up in the code.
Okay, thank you very much for that, Seema Shah of Principal Assets Management. Let's step away from the market stories for a moment and bring you the latest on Turkey and the earthquake situation in Turkey. Turkey reporting a 7.5 magnitude quake in one province. This is hit by this is a second high magnitude earthquake, this following the 7.7 magnitude earthquake that hit Turkey in the last 48 hours or so. There are many people talking about this having been the worst quake to hit the country since possibly 1939. We remember the late 1990s, the quake then killing 18,000 people. In 2011, a prominent earthquake as well. Sadly, a country very familiar with this kind of thing. We will certainly bring you an update on the latest here shortly. This is Bloomberg.
Top names in climate change are on Bloomberg.
I want everybody committed to the kind of action that we need. We have a global emergency now.
You know, we're still putting 162 million tons of man-made global warming pollution into the sky every day, using the sky as an open sewer. That's trapping as much extra heat as would be released by 600,000 Hiroshima-class atomic bombs exploding every day. That's what the scientists tell us, and the data shows it. That's crazy. That's why we have a third of Pakistan underwater. That's why we have the historic heat wave in China. Nothing comparable to that ever. That's why the heat records are broken every year. And we're seeing an increase in the flows of climate refugees crossing international borders that are due to vastly expand unless we take action to solve the climate crisis.
Nobody covers climate change like Bloomberg, your global business authority. The top names in business are on Bloomberg.
I think the future of autonomy is real for civil. It's going to take time. Everyone's got to build confidence. We need a certification process that we all have faith and believe in. As you may know, we have an application on an all-electric autonomous airplane we refer to as WISC. There's so much to learn, so much to do, but it is being done.
Nobody covers business like Bloomberg, your global business authority.
We should stress that this is an unexpected incident caused by the force majeure, and the U.S. Department of Defense also said it will not present any military or physical threats to people on the ground. Despite China's explanation, U.S. use of force is overreaction.
A spokesman there from China's foreign ministry criticizing the U.S. for shooting down a Chinese balloon off the South Carolina coast on Saturday. The U.S. has sent divers to salvage what the government believes is spy equipment from the balloon. It's expected to be hauled up in the coming days. Joining us now is Diana Choileva, chief economist at Inodo Economics, a research firm focused on China. So, Diana, this is all very interesting, right? Why send a balloon instead of a satellite? What kind of technology is on there? Who makes that technology? Do we have balloons as well, et cetera, and so forth? I wonder, though, simply why China would send a spy balloon that's so clearly visible as they're trying to, it seems, repair relations with the U.S. What's your take?
It's highly likely actually a mistake. Look, balloons are one of the oldest forms of surveillance devices, but they have been increasingly coming into use in recent years because they can fly at high altitude. They can hover over a long period of time, which a satellite cannot do. They're untrackable. The problem was that, unfortunately, this one got tracked. And I don't think this was a signal that China was trying to send to the U.S. It also is highly unlikely that the PLA was doing something that Xi Jinping wouldn't have approved of, as was the case a while back when we had such an incident with a test flight of a stealth fighter, which the president then, Hu Jintao, had no knowledge actually that test flight was going on just as the U.S. Secretary of Defense was visiting. This time, this is unlikely to be the case. It's much more likely a mistake. But whatever sensors this balloon was carrying, one thing it did manage to measure is the temperature in Washington when it comes to its attitude and relations with China.
Well, and maybe that's why they sent it up there in the first place. You know, a few people have been comparing this to the U-2 Institute in the 1960s when we sent a surveillance plane over the Soviet Union, and that was shot down. It led to a worsening Cold War, the building of the Berlin Wall, and is it likely that this goes in that direction? What are your expectations in terms of the results?
The U.S. response was proportionate, unlike the Chinese claim. And you can imagine what the outcry would have been in China if that was a U.S. surveillance balloon being discovered. And actually, it was a well-done operation in terms of shooting it down over the sea. in that sense, probably also the US gathered itself valuable intelligence information. China was, though, aiming to appease the US. It doesn't quite fit with what they were trying to do, that this was a deliberate act. Look, everyone spies on everyone. You're just trying not to get caught. Unfortunately now, it's very difficult to see how they can row back from this.
Well, to that point, Diana, whether or not it was a mistake or intentional, the optics are really bad. So how does Beijing repair this damage?
Absolutely, and it's very difficult to see how it would repair this damage because, of course, in the US, we are now heating up and in the run-up to the US presidential elections. And it's clear that there is a bipartisan hard attitude towards China, but it's likely to get harder as we progress forward. So what can China do to really change perceptions? It's very difficult to imagine. So I think this hope for a detente, for a lowering down of the temperature in terms of the deterioration of the Sino-US relationship really doesn't have any future.
We saw a briefing, the usual daily briefing we get from the Foreign Ministry in China, Diana, a little bit earlier on, and they were emphasizing on the one hand the right to retaliate that China believes it would have after this episode, but also reiterating what they say is the accidental one-off nature of this balloon straying into US airspace. How will this play out domestically in China? It was interesting in itself that this was reported extensively, was allowed to be reported in China.
Well, in China, it makes sense for such an incident to be reported in the sense that it sort of maintains across the domestic population that China is standing its ground. In fact, China has created a double-edged sword for itself, or I mean, the Communist Party has created a double-edged sword for itself by stoking nationalist sentiment over the last 20 years. So often when incidents like this happen, they're pushed even further by the population. So for example, when Nancy Pelosi visited Taiwan, China actually responded very strongly, but the Chinese population still pushed back on Weibo saying that the response was too weak. So it's then how China manages the optics at home in terms of its response to this incident and the US shooting down the balloon.
Diana, thank you very much. Always good to speak to you with your expertise on China. Diana Choi-Lever of Enodo Economics. Coming up on Balance of Power a little bit later on, we'll pick up this theme. Former US Secretary of Defense William Cohen joins the team. That's at 12 p.m. in New York, 5 p.m. in London. We will be getting you an update on the latest from Turkey shortly. This is Bloomberg.
We have only 8% of the ocean protected today, and our Earthshot is, as Patty said, 30 by 30. 30% of the ocean, at least 30% of the ocean protected by 2030. And we know that if we protect the right 30%, not only we will prevent the extinction of many marine species, but also we will produce more fish. There's going to be, these protected areas are going to produce a spillover that will exceed the foregone catch. So we're going to have more fish to eat, food security, livelihoods for people. And we know that for every dollar that we invest in a protected area, in a marine reserve, that produces $10 in economic output and creates more jobs. So it's a triple win for marine life, for food security, and for climate, and of course, for the economy. So that's the goal, the mission.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. Some of the most powerful earthquakes in decades have hit the Middle East today, Monday, killing more than 1,000 people, at least, in Turkey and Syria. I say earthquakes plural because we've just had confirmation of a second high-magnitude earthquake to hit the south of Turkey. Let's get an update, essentially, on what's been happening on the ground, what we know. Ona Ant joins us, Bloomberg's Turkey Bureau Chief, with the latest. Ona, bring us up to speed.
A second massive earthquake just hit Turkey literally half an hour ago. It was the second one in less than 12 hours on Monday. The first one being 7.7 magnitude and the second one being 7.5 magnitude. The second quake was in close proximity to the first one. It took place in the southeastern province called Kahramanmaraş. That's also close to Turkey's border with Syria. And as you said, so far we know at least 1,000, well, more than 1,000 people were killed as a result of these quakes in both sides of the Turkish-Syrian border. And according to President Erdogan, Turkey's President Erdogan, more than 3,000, just around 3,000 buildings have collapsed on the Turkish side alone. So this means even without the second tremor, we would very likely see a dramatic increase in the number of people who got killed or injured because of the earthquake. But we don't know what exactly the second one did. Nobody knows yet. It just literally took place minutes ago.
Truly horrible from a humanitarian standpoint, a massive human cost. There's also the question, Owner, of the economic cost and any disruption to oil flows, for example. What do we know about that?
In terms of international energy flows, the area is home to pipelines that carries crude oil from Azerbaijan and from northern Iraq to Turkey's export terminal in Ceyhan on the Mediterranean coast. After the first earthquake, Turkish authorities said they detected no leaks or other problems on those pipelines, but yet they still halted the oil flows to Ceyhan as a precaution. Now, we didn't know when it would come back, but surely the second earthquake means they're not going to come back immediately. They will probably be checking for any damages on the pipelines.
Ona, thank you very much. Bloomberg's Ona Ant with the latest there, reporting from Istanbul, but about that series of earthquakes. We saw that large 7.7 earthquake in the early hours of Monday, followed by just in the last few minutes or so, last 10 minutes or so, a 7.5 measuring earthquake in a similar region as Ona was just spelling out for us. We'll continue to bring you updates from Turkey throughout the day as we track the rescue efforts that are now underway, in particular in the south of the country, in Turkey and across into Syria as well. That is it for Early Edition. Surveillance continues. This is Bloomberg.
the standard way venture firms work is you commit capital, let's say over a 5-year investment period, something like that.
Yeah, exactly. Right.
And then the fund just typically lasts maybe 10 years or so.
15. Well, these days longer. So often 15. Often the tail extends out to 20 years because these companies take a long time to develop.
And somebody that invests in a venture fund today should be trying to get rates of return of 20%, would you say, or more?
You know, top-end venture is sort of 3x net of fees. You know, ideally you're hoping for more than that. You're hoping for 5x or more. You know, you're illiquid the entire time, right? So you'd hope to get paid for the liquidity.
And today,
so yeah, maybe 20 to 40% if things go well is sort of baseline.
Let's take another subject. Let's suppose somebody says, I don't want to invest in Andreessen Horowitz. I want to be Mark Andreessen. How does somebody become a venture capitalist? What are the skill sets for good venture capitalists? There's a high degree of intelligence, hard work, a lot of luck, dress the right part, don't wear a tie. What are the things that make one a good venture capitalist?
So the highly successful VCs historically are very idiosyncratic. You have people from very different backgrounds. Mike Morris is a former newspaper reporter. John Doerr is a former chip salesman. You've got people with very different. Jim Breyer has more of this kind of blue chip investment background. You have people with very different backgrounds and experiences. And so I think it's some set of skills and some set of knowledge, and then there seems to be a taste component to it that's really hard to measure and really hard to predict.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, China Open.
This is Bloomberg Technology.
To our television and radio audiences worldwide, welcome now to Balance of Power. This is Bloomberg.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Countdown to the Close. Welcome to Bloomberg Crypto.
Consumers are telling you that things are okay in the labor market.
The hot, tight labor market is still going to be an issue for the inflation outlook and for the Fed outlook.
It's not easy for the Fed, and markets, by occasionally loosening financial conditions, make it even more challenging for the Fed.
Financial conditions had an extraordinary run of tightening all the way through October of last year. That is what's impacting the economy now.
The economy is slowing, and we are seeing those earnings cuts. They're just not happening as fast as we would like to see them.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
It's the hangover after a monster payrolls report, live from New York City this morning. Good morning for our audience worldwide on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. This is Bloomberg Surveillance. Equity futures down 0.9%, TK in the bond market. Your 2-year yield started Friday morning at 4.09%. It went through 4.40 a little bit earlier.
I thought a boring Monday. It is not a boring Monday, and my focus, John, is the bond market where you've got massive inversion, 2's10 spread with that 2-year yield moving out to negative 80 basis points moments ago. And I looked at the widest statement on spread, 3-month to 30-year is buttressed right down to 30-year inversion.
So we've gone from soft landing to hard landing to soft landing, and now we're talking about, wait for this, no landing. Torsten Slok over at Apollo put this out in the last couple of days. It is beginning to look more like a no landing scenario. Under the no landing scenario, the economy does not slow down. Upside risk to inflation return. And Lisa, maybe the volatile price action of 22 comes with it.
Well, that's the really focus that I have, is that if you do get a resurgent inflation and you do get a really resilient economy like what we seem to be getting, then what's to stop the Fed from going further? And that's what's getting priced into the market. That's what you're seeing on the front end. And perhaps that's what's driving some of the volatility in stocks.
So Chairman Powell last week talked about the disinflationary process starting. Does Friday's jobs report challenge that, contradict it, or support it?
Challenges that, because what you're seeing right now is incredible strength, and any way you cut it, people talk about seasonality, but honestly, people are saying the strength there, and also in services, climbing the most going back to 2020. Again, the momentum underpinning this economy, very strong.
I like what Ferroli and Silver said over at JP Morgan, writing Friday evening after that truly shock Friday that we had. It's a time will tell economy. Everybody is data dependent, and they take their GDP number for Q4. They nudge it up to 3.1%. That's a big number.
Well, I have to say on that data dependence, Tom, it wasn't just the payrolls report. The non-manufacturing ISM, big big bounce, a major bounce, in fact, Lisa. And I think if you were looking at the economic data, you had a tug of war between sub-50 PMIs and maybe the labour market data. And we were trying to work out, how does that reconcile? Do you see the labour market break down towards where the PMIs are, or do the PMIs start to bounce back? I think on Friday, you got a hint, at least an early clue on where this might be going.
We know we've got a manufacturing recession. We have the opposite. We have a resurgent services sector because people want to go out and do things. And that really is what really was driven home on Friday. So any way you cut it, Jay Powell doesn't have to walk this back. It's being walked back by the data.
We've got a ton to talk about today, not just markets, but also a surveillance balloon. The balloon, Tom, getting fired down on Saturday. Did you see that?
Yeah.
That live shot?
I think it needs to be said. I was talking to my driver this morning. The Bentley's in there. It was cold this weekend.
It's
Bentley
freezing.
wouldn't
I'm pleased to agree on that.
Yeah, well, the Bentley wouldn't start. I was really upset about that. Anyways, I'm talking to my driver, and he thought it's a balloon, like, a party balloon. And I said, there's 3 buses of metal that the balloon is
with a
carrying.
satellite.
He's like, why didn't they shoot it down? I said,
And
well, they didn't shoot it down because, no, they think it's like around the world in 80 days. No.
We'll speak to our balloon expert in a bit, Tom. Bloomberg's Anne-Marie is down in DC. She's going to join us in about 10 minutes' time. Equity futures look like this morning. Good morning to you. We're down 0.9% on the S&P 500. Yields bouncing back in a major way. 361 on a 10-year, up 8 basis points. Though, Tom, we keep talking about it. Your 2-year up 10 basis points. Just short right now of 440.
You want the thermometer to get through the week. It is the 2-year yield. The benchmark is a 10-year in from the 30-year long ago and far away. And I do agree the 2-year is sort of the easy way to watch the ebbs and flows of this as you try to have a confidence to stay in this bull market.
Lisa, that dollar strength continues. Euro dollar 107.65.
This is going to be about the data. We've been talking about that consistently. So does Fed Chair Jay Powell tomorrow have to walk back what he did last week with respect to perhaps a dovish readout, at least in markets? Perhaps not, because really the data is doing it for him. Tuesday, we also get President Biden giving the State of the Union address. This is not necessarily the same kind of week as last week. It is the hangover. It is the digestion week, but we do get a slew of earnings as well, including Activision and Blizzard and Pinterest today, Chipotle and Royal Caribbean, as well as BP tomorrow, Disney, Uber, Total Wednesday, PayPal, Pepsi, and L'Oreal on Thursday. To me, how much do we see ongoing shrugging off of highly disappointing results? These have not been good on a whole. If you take a look going back, in some ways, it's the least positive in terms of upside surprises going back to 2008. About half of the S&P has reported earnings. The S&P is up about 7.7% year to date. The NASDAQ has actually just saw its best start to the year going back to 2001. How much can we keep that going? And then it's also kind of light on the data side, but it feels like initial jobless claims is going to take on more weight on Thursday just because of what we saw on Friday. And the University of Michigan Sentiment Survey, when do we start to see inflation expectations over the next year increase again, John, because this is something that is very correlated to gasoline prices. Gasoline prices are starting to edge upward. Does this sort of challenge this sort of linear disinflationary narrative that seems to have taken hold of markets?
Elisa, thank you. When you Mitch called you, Tom, what will you say about inflation expectations? How will you respond?
I think it has value to look out 5 to 10 years over the major sweat of any central bank, which is, are we unanchored? And do we have credibility? I'll give it that value. I'm way more interested in February 14th, Valentine's Day, U.S. inflation, February 23rd, Japanese inflation.
There we go. Spurs Milan, remember that, Tom?
It was great. I turned on the TV. I'm like, they played AC Milan.
You watched Spurs City?
I did. I did. I was amazed they pulled it out. I thought Jack Grealish
You've got 30 seconds to deliver your match review. You ready? Go.
My match review was the big guy for Man City's invisible.
Haaland.
They got a problem there.
People agree with you too.
Well, I don't know what I'm talking about.
There's a man who might score 40 goals this season, Tom, and he's a problem, apparently. We worked out why.
I don't know. I mean, I turned it on. I thought they were playing AC Milan. I looked at
they lost 2 last night.
Can we take a moment here, folks, for
a moment of silence for
Guy Johnson emailed me Sunday, and he says, would you talk to John about Six Nations rugby and Italy?
Italy almost beat France. I know.
Pretty cool.
We don't win rugby games. We came very close.
Tommaso Allen, his father is Scottish, his mother's
Did you
Italian.
actually watch this game?
Yeah.
Or have you been speaking to the floor manager and getting clues? There's no way you watched that game.
It's like Lucy and Peanuts when they kick the ball over the thingy, but the field goal. But anyways, nice job control. Tommaso Allen sort of like blew me away for Italy.
You notice they don't wear pads and helmets. Have you noticed that?
Yeah,
because they're harder.
It's really like, do they like in soccer? They get hit in the head, they stop the game for 15 minutes.
These guys
had never played.
Just keep going. All right, Tom, that was nice.
That was all right. Thank you, Guy Johnson, for mentioning
We still lost. Laurie Calvasina joins us now, head of US equity strategy at RBC Capital Markets. Laurie, let's just start with the jobs report on Friday. It follows through into Monday, equities lower. What did that change for you, if anything at all?
So, look, I think it's one data point. I think there was a view that emerged over the weekend in Friday trading that the Fed may have to stay higher for longer. We may not get the pause. We may not get the cuts. I'm still in the camp that thinks we are closer to the end of this hiking cycle and we're going to get the pause. And for me, it really underscores the idea that this economy is very resilient. I think there could have been some labor hoarding. I think that there are things that could explain that hot number, but I think we just see this time and time again, just evidence that the labor market is tight and that we are seeing, if you look at some other reports, we're seeing some indications that wage growth is slowing. I think that's probably enough to help inflation come down. So I'm not overreacting to Friday's report. For me, the broader thesis is still intact for now.
Laurie, what I find fascinating, I thought of you this weekend, Bloomberg reporting that Danaher is looking at a service company in the medical field. It's a mid-cap, smaller cap kind of thing. Not a zombie roll-up, but are we just going to see a roll-up in your small, mid-cap space because money finally costs something?
I think it's a potential catalyst for markets going forward in the small mid-cap space in particular. So one of the things we know about small cap companies is the quality is higher than it used to be. What we also know is that the price we're going to pay for, either skirting the recession or a short, shallow recession or a growth scare or whatever we end up calling this is probably going to be that economic growth is subpar for a little bit in percentage terms. And I think that incents companies who have a lot of cash still sitting on their balance sheets, who have very good structures in terms of their debt profiles. I think this is going to incent them to go out and buy some growth. And when you're looking at historically cheap valuations in small relative to large, it's something that simply makes sense. So I think it's, it's something that we have to watch going forward. And I think it argues against a deeply bearish narrative in markets.
At the same time, if you talk about Torsten Slok's narrative about no landing, is that positive for equity valuations if that means higher rates for longer and companies having to justify their capital structures in a much higher rate regime?
I think it depends on exactly what you mean by higher rates. Now, if we're going back to something that we saw in the 70s, of course, that's going to slaughter PE multiples. We actually have a model where we bake in inflation, Fed funds, and also the 10-year yield. And we published an update on that this morning. We do have a couple cuts baked in for the Fed at year end, and it gets us to a 22 times multiple. We also have, the 10-year treasury at around 3.4% and inflation moderating to around 3%. But let's say I just go in, Lisa, and flex those interest rate assumptions and kind of take the Fed number up and just leave it there. So don't bake any cuts and keep that higher for longer. I'm still looking at a 20 plus PE multiple on a trailing basis on this year's earnings. So it hurts a little bit, but it doesn't hurt as much as people think if you go in and do the math.
Laurie, I just want to finish on the rest of the world. China has gone from uninvestable to unavoidable, and then seemingly in the last 48 hours has swung back to something in between. Laurie, how much interest is there from your clients to invest abroad this year?
So it's been huge, John, and we've talked about this in the past, but I think investors came into 2023 just wanting to do something new. And one of the new things that people wanted to do was play the China reopening thesis. And I think raising the geopolitical angst and talking about worsening relations between China and the U.S., I think it complicates the ability to play that trade. So as we sit here and think about things that could push markets down in the short term or cause, things to just lose a little bit momentum, to me, frankly, that's, a more legitimate downside catalyst than say, oh, earnings need to come down a little bit more. I think the market understands the latter. I think the China issue it's challenging something that had gotten people very excited coming into this year.
Laurie, wonderful, as always. It's good to catch up and kick off the trading week with you. Laurie Calvasina there of RBC Capital Markets. The response from China over the weekend, Tom, from the Foreign Ministry, expressing, quote, strong dissatisfaction and protest, accusing the US of, quote, overreacting and, quote, seriously violating international practice. What do you make of that?
Greg Vallier published a few moments ago. We'll talk to Anne-Marie Horton about that, but it's a dramatically moving story this Monday morning.
And a pressure build another president to maybe do something about export controls again. All over.
I wonder what it means about China.
I agree with you. Coming up in the next hour, not just on that, but also on this market, Michael Kushmer of Morgan Stanley Investment Management. He'll be joining us at about 7 a.m. Eastern Time.
Keeping you you up to date with news from around the world. With the first word, I'm Lisa Mateo. Some of the most powerful earthquakes in decades hit the Middle East today, killing more than 1,000 people in Turkey and Syria. The first quake measured 7.7 and ripped across the border between the two countries. The second quake also hit the southeastern part of Turkey and measured 7.5. The quakes forced a halt in crude oil flows to a crucial Turkish terminal. Divers have been sent to recover what the U.S. believes is spy equipment from that Chinese balloon shot down off South Carolina. Bloomberg's learned the government expects to find equipment capable of taking detailed photographs along with other sensors. Now, lawmakers are demanding to be known if any of the technology came from the U.S. or its allies. In the UK this week, healthcare workers will walk out in record numbers. That will cripple the National Health Service and put more pressure on Prime Minister Rishi Sunak to resolve pay disputes. Nurses and ambulance workers are striking today. Nurses will take action again on Tuesday. Renault and Nissan have agreed on a landmark deal to reshape their alliance. Renault will cut its holding in Nissan from 43% to 15%. Meanwhile, Nissan will invest in Renault's electric vehicle business. The agreement's aimed at easing long-standing tension between the two automakers. And Dell has become the latest tech company to announce massive job cuts. It will eliminate a little more than 6,600 jobs. That's about 5% of its global workforce. Dell faces plummeting demand for personal computers. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
Multi-trillion-dollar industry. There's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. Monday on Bloomberg.
Lisa, you've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
Tuesday, President Joe Biden delivers the State of the Union address. Join David Weston and Bloomberg's top political reporters and analysts live from the Bloomberg headquarters in Washington, D.C. as President Biden lays out his plans to tackle the war in Ukraine, Congress's debt limit standoff, immigration, and more. And stay tuned after the speech as we break down the Republican response. Special coverage starts at 8:30 p.m. Eastern, simulcast on television and radio, only on Bloomberg, your global business authority.
On Wednesday, when I was briefed on the balloon, I ordered the Pentagon to shoot it down on Wednesday as soon as possible. They decided, without doing damage to anyone on the ground, they decided that the best time to do that was if it got over water outside within 12-mile limit. They successfully took it down.
The President of the United States, what a weekend following that thing, the balloon. been shot down, Tom. The response from China, equally interesting. The Vice Foreign Minister saying the following: China will resolutely safeguard the legitimate rights and interests of the company concerned. Lisa, you're going to have to translate this. And reserves the right to make further responses if necessary. Can you make sense of that quote?
So there was a lot of analysis over the weekend about Xi Jinping both trying to appeal to the nationalist bent in China right now and trying to toe a line of not caving to the U.S., but also not escalating some of the tensions. This is just basically a non-statement that gives you no sense of what's going on.
It's a weather balloon, Tom, we're told by the Chinese government.
Maybe.
The U.S. government is saying it's a surveillance balloon that is controlled by the Chinese and traversed across the United States.
I think we know pretty well it's 3 city buses of metal underneath the balloon, and on there is stuff, and maybe it's a substance for the next Bond movie. We'll have to see. No doubt cast in the next Bond movie is Emery Horton, our Bloomberg Washington correspondent. Emery, I want to talk about one of the political things, which is they're going to bring this thing up, and they're certainly, let's believe, capable of doing that in relatively shallow water, and they're going to look to see if Cisco or Motorola, I don't mean to pick on those companies, but they're going to look for U.S. parts on there. How does that play in the white marble of Capitol Hill?
Well, if there's any U.S. technology that was used in this Chinese spy balloon, I mean, these companies probably are going to be that now under a serious microscope. Already we know that companies are under a microscope in the sense that the Biden administration, over the course of the past 2 years, following on the previous administration, when the Trump administration was looking at ways that they could hit back on China in terms of getting their hands on sensitive U.S. technology. We had those export controls that were introduced in October. The Biden administration, on top of that, this is for the sensitive technology, the Biden administration, on top of that, was able to get the Netherlands and Japan on board with that. And now they're going to be pushed to do even more. But we just don't know yet what was on the balloon. So we should wait to pass any judgment on any sort of companies or technology.
So, Anne-Marie, Secretary Blinken was going, then he wasn't going. Is he still going to go?
At some point, this is a debate right now happening in Washington. Does he go even sooner to make sure that he now delivers a much harsher, aggressive message to China? This trip, there was not going to be any real deliverables. This was supposed to be the warming of the frosty ties that we saw back in the summer after Speaker Pelosi's trip to Taiwan. And it came on the heels of Xi Jinping and Biden sitting down at the G20 in Bali in November, and then most recently, Secretary Yellen and Liu He in Switzerland. But now, if Blinken was to return, and some are pushing that he goes very quickly for this meeting, which, remember, there hasn't been a Secretary of State that's been to Beijing since October 2018 with that very frosty visit with the former Secretary of State Mike Pompeo. Many are saying he needs to go and deliver a very different message to Beijing.
What about domestically? What's the message there? We were just hearing from Lori Calvasina and talking about the potential risk to this China reopening glory that seems to be taking over certain stocks. Is that going to get some pushback, some cold water from an administration that's going to try to crack down a little bit in terms of diminishing that economic relationship between China and the U.S.?
Potentially, but you look at the acrimony in words between Beijing and Washington, but you look at the trade data in 2022 is on the brink of cracking records. I mean, when you look at actually the business that's being done between the United States and China, you would not realize that there is this very frosty relationship happening and boiling at the top. Domestically, the big challenge the Biden administration has is the pushback they've gotten from the Republican Party. I imagine the president is going to be addressing the spy balloon in his State of the Union tomorrow. But Republicans are saying that it should have been shot down the moment it entered U.S. airspace, and they shouldn't have had an extra 4 days to make this flight path over towards, at the end, South Carolina, and then where it was shot down just off of Myrtle Beach.
What is your agenda this week, Amory Horton, besides listening to the Beyonce catalog? I mean, what is like the to-do this week?
Congrats to Beyonce, epic.
What's like the schedule?
Tomorrow is the State of the Union, so really everything in Washington will coalesce around what the president plans to say. It's an interesting moment for him because he's obviously going to claim victory, whether it's the economy off that stellar jobs report on Friday. Likely now there'll be some rewriting with the Chinese spy balloon. But also, it's coming ahead of a time when we are expecting the president to announce his campaign for 2024. So the rest of the week, the president, as well as all the members of his cabinet, are going all over the country. Raimondo is going to New York. The president is going to a number of other states, and they are going to push their legislative victories and agenda of what they'd hope to accomplish in the next 2 years.
Do you think they've quickly edited that section on the labor market in America after Friday, Anne-Marie?
I imagine they did. I would be shocked if the president doesn't talk about the jobs number within the first 5 minutes of his speech tomorrow.
Hey, mate, thank you. Anne-Marie, down in D.C., full coverage of that event taking place tomorrow evening right here on Bloomberg. Let's think about the timeline, Tom, Lisa, and the history of all of this. The president said that he was briefed about the balloon on Wednesday. We're being informed.
Really looked into this.
We're being informed that it's not the first time this has happened, and it happened also under the previous president. So Blinken was still going to China only until it became public knowledge that there was a surveillance balloon hanging over the United States of America. The reason I bring this up, I think it's really important to think about the language used from the Chinese, from the United States, from the Chinese government, and from Washington, D.C. Is this just for public consumption, theater? Does it actually change the trajectory of policy when they already knew these kind of things were going on and they were still going to Beijing? And the only reason they didn't go to Beijing is because we all found out about it in the last couple of days.
Well, theater on both sides, right? I mean, basically, for both the U.S. and China. Really, this is the main question over the weekend. How much is sort of the theater of it going to dictate the contours of a relationship that potentially is fraught? Because Xi Jinping is trying to send a certain message to his people, and you've got President Biden trying to send a message to his people, and both sides are splintering. They want further relations, at least on a zeitgeist level. However, at a business level, they're getting closer and closer. So this is sort of the conundrum for a lot of people.
Hey, that's police, message in a bottle. I mean, as you say, they're messaging like crazy this weekend, and I think the whole Monday morning here is messaging. I love these phrases, John. They're killing me. On Renault, Nissan, it's an alliance reset.
Do you want to talk us through that alliance reset?
No, I don't want to talk to you. It's too complicated. It's such a soap opera. It's way more complicated, folks, than the straight-up reset to 15%. And the other phrase, this is from Deutsche Bank. Ready?
Go on.
Tactical layoffs.
Tactical layoffs.
Tactical layoffs.
I'm sure they feel super tactical for the people on the other side of them. Corporate language just drives people nuts.
Corporate language is
agreed.
out of control.
Okay, agreed, because these are people's lives. On the flip side, what you're seeing now is the layoffs that were not executed during the pandemic era are coming back in full force. And deciphering what's sort of a return to normal versus some serious cutback that is indicative of a changed economic cycle, very difficult to know.
You saw the numbers from Dow, Tom, 5% of the global workforce.
6,000 people.
Just kind of 5% here, there, and everywhere, right? Company after company.
It's
in that particular industry group, anyway.
Yeah, it's a PC thing, and I noticed Apple was a little light on PC's iPad on a unit basis, saved the day. But it's just the ebb and flow out of the pandemic boom. Pandemic, let's buy PCs. Everyone's working from home. That's over.
Well, there's a little bit more, though, to this particular trend, because Dell is going back to the workforce that it had back in 2017. So this is going back way pre-pandemic to another level. What are we resetting? And you've talked a lot about this, John, in terms of what kind of excesses are we unwinding? Is it pandemic or is it pre-pandemic as well?
One number matters after Friday. 517,000. So many people doubting that number still, TK. Just looking at it and just thinking, yeah.
I'm still reading it, and guess what?
Where did that come from?
Number of hours worked, number of bodies working. That seems to be what the adults are looking at.
It was strong, though. It was strong.
Equity futures right now, down 0.9% on the S&P. Coming up, Jill Moak of AXA in Investment Managers.
life, I've often said, is to be happy, but you seem like a very happy person.
It's like nature. Nothing ever stops. So you could be super happy 1 minute and then something happens. So it's just living. It's the joy of life.
For any young woman that's watching this, wants to be the next Diane von Furstenberg, what would you recommend?
I think the most important thing in life is the relationship you have with yourself. Once you have a good relationship with yourself, any other relationship is a plus and not a must. And the second advice is to be as true to yourself as you possibly can. And you have to accept and own things you may not like, but the more you could be you, the happier you would be.
The top names in business are on Bloomberg.
Different countries are at very different places, so you actually cannot speak in generalities. We expect to see a rolling series of country recessions, but the vulnerabilities that amplified previous recessions around the world are not present. That omens well for a mild recessions when they come.
Nobody covers business like Bloomberg, your global business authority.
A rough end to last week, a tough start to this week. Equity futures negative on the S&P. We are down by 0.9%. On the Nasdaq 100, we're down by 1.2%. Mislav Matejka over at JP Morgan saying position is quickly normalizing. The question is whether there will be a fundamental confirmation for the next leg of the rally. They say, we think that it might end up lacking, Tom. They go on to say, we advise to use the current strength in order to reduce exposure. They're not bullish this market.
That was channeling Mike Wilson, right?
They're on the same page, yeah.
There's a lot of that same pageedness going on.
Morgan Stanley and JP Morgan. In the bond market, we look like this, 2s, 10s and 30s. Bear in mind where we started the year, where we got down to on Friday, and where we are right now on a 2-year. We started the year in and around 440. We dropped to as low as 4.03%. On Friday morning, we were sitting at 4.09, and we have jumped aggressively higher at the front end of the curve, back to 439.30, and went through 440 a little bit earlier this morning, off the back, Tom, of a really strong payrolls report, which is just totally upended expectations of what this Fed might do through the rest of this year. And as Lisa pointed out 30 minutes ago, it's over to you, Chairman Powell, tomorrow.
Further curve inversion, I agree, Chairman Powell will be of interest, but just further curve inversion. I saw negative 80 basis points on the vanilla spread, and I'm broadening that out. I'm looking at the very short-term 3-month, think of it as a T-bill versus the 30-year bond as well. Can we get framed here on the equity markets? Let's do the drawdown right now. Drawdown is bow tie talk from the peak. S&P 500, John, this is important for you, negative 14%. The Dow Jones Industrial Average has a lesser drawdown, negative 7% within correction. And NASDAQ's harmed here, maybe, John, is a partition of profit-making versus a non-profit.
You've got the year-to-date gains as well, Tom.
I don't have them in front
of me. The NASDAQ 100's up about 15%. Brammer went through them at the top of the hour.
I missed that.
Massive gains. A big move in euro-dollar as well. Let's get to that. We were talking about 110 on euro-dollar. Now we're talking about 107. Euro-dollar 107.59, negative 0.33%. It wasn't just the Fed last week. Chairman Powell saying the disinflationary process has started. It was also the ECB and President Lagarde suggesting that maybe things are becoming more balanced on the inflation front. Gilles Moak of AXA Investment Managers saying the following: the dovish nuggets in the Fed and the ECB's communication last week were sparser than what the market reaction would suggest. Tommy goes on to say the US payroll rightly put a dampener on the market enthusiasm.
Well, there it is. I mean, it's just as simple as that. And looking at 3 central banks, and very importantly, Mr. Moak, a real student of continental Europe, says Lagarde is the last hawk standing. Gilles, how hawkish are all these banks? I mean, after the summation of last week, has hawk disappeared?
No, I think hawks are still there. It's just that they are probably a bit less worried than they were a few months ago, because they can probably see that, or at least they thought they could see in the US case, that what they were doing is working, in the sense that gradually you could see the economy slowing down. You could see the monetary tightening working its way through the economy. So once you are in restrictive territory, even if you're a hawk, it makes you more comfortable on the pace of tightening. And this is, I think, exactly what Christine Lagarde told us last week, which is we are in restrictive territory. We'll continue to hike. That message was, I think, a bit lost to the market last week. We'll continue to hike, but they can see some positive elements in inflationary pressure, which makes it possible that they will revert to a normal 25 bips hiking type rather than the jumbo hikes we've had so far. But the direction of travel for me is still very clear. We're not done. The terminal rate has not been hit.
Gilles, to me, the sequence of events here began with your French, and the answer is the French shocked and reported a better than good economy. In the coming, say, 2 quarters, do we underestimate European country-to-country GDP?
Actually, I would remain prudent on the coming 2 quarters because, okay, Q4 2022 came up with a slightly positive surprise. We didn't have the catastrophe that we were fearing because, gas supply did not completely dry out, so Germany didn't have to go into top-down rationing. But, France plus 0.1% quarter-on-quarter in Q4, Germany minus 0.2%, Spain plus 0.2%. I mean, we're just at the flotation line. And if you get into the first 2 quarters of 2023, yes, of course, we could expect some traction from the Chinese reopening. But, the monetary tightening is working its way through the economy, as I said earlier. And there was an interesting point in what the ECB said last week. They noticed that the credit impulse, if we can use the word again, the credit impulse has turned sharply negative in Europe. You can see, new flows of credit to the corporate and to the household sector drying up in Europe. So we may get some good news on the external side of our economy, but domestic demand might begin to be really impaired by the fact that we are in restrictive territory as far as monetary policy is concerned. And sometimes I think the market forgets about this. It's not going to be painless to bring your monetary stance from super accommodative to restrictive. There will be a price to pay.
And a lot of people have been talking about this. It's hard to imagine that we could go from negative to positive by a couple percentage points and that nothing would happen. Let's talk about some of the external factors, particularly as we talk about rising U.S.-China tensions. What's the potential bleed through if the U.S. turns to Europe and says, you too need to get a little bit harsher with respect to China at a time when the China reopening has been a massive tailwind for the European economy?
In terms of immediate impact on Chinese, on the European economy, I don't think it is that it matters that much because unless pressure from the US becomes absolutely massive, there will continue to be a rebound in European exports to China, just mechanically because of the way demand is moving there. I think it's more a medium to long-term issue. It's more important when it comes to supply lines, to investment in particular. And it's true that you can see the mood is changing in Europe around China. I think until a year, 2 years ago, there was a sense that the US was maybe a bit obsessed over China, and that Europe would try to find a sort of balanced way between the two. Now, I think in the last 1 or 2 years, it has started to creep up the idea that, hey, you may want not to be overly reliant on China for your supply lines, for your developing markets in the future. So it's not as central as what it has obviously become in the US, but you can see actually the mood moving towards the U.S. interpretation of what China is doing.
You can see the mood on the political side. Economically, though, how much of the gains that we've seen and the surprise to the upside has really stemmed from the reopening of China, from Germany in particular's ties to that nation and the need for investment, purchases, and supply lines?
For now, I think it's really marginal. I think we'll see it more into the first quarters of 2023. Q4 for me was really a story of a much-awaited catastrophe which did not materialize. I think we talked a few months ago, and we were really worried about the possibility that we would get into a sort of sudden stop in energy supply, especially in Germany, because we had a hard time finding the right alternatives to Russian gas. thanks to the drop in German consumption, thanks to the fact that US LNG has arrived en masse and faster than we expected to European shores, we haven't had this sudden stop in energy supply, and this has allowed the German economy not to fall into a significant recession. But it's really the main driver as of now. China, that will come later.
Gilles, it's away from your remit at AXA, but today we have the picking up of the pieces of what I'm going to editorialize has been a less than successful joint venture of Renault and Nissan. Tell us about French manufacturing might. They're always compared to VW. VW, I think it's up 7 or 8% per year the last 20 years. Renault can't get out of its way, up 1 or 2% as well. But help me with the confidence that French manufacturing can move forward.
Well, manufacturing in France, anyway, plays a smaller macro role than in Germany. The services sector is much more dominant in France than it is in Germany. But the speed of deindustrialization has abated, actually, the last few years in France. And you still have a number of flagship companies which hold their own in that race. When you look at it, what's interesting is that you see a lot of cross-border alliance coming, not just the old one between